Psalm chapter 119, verse 76. Let your steadfast love comfort me, according to your promise to your servant. Psalm chapter 73, verse 26. My flesh and my heart may fail, but God is the strength of my heart and my portion forever. Psalm chapter 27, verse 1. The Lord is my light and my salvation. Whom shall I fear? The Lord is the stronghold of my life. Of whom shall I be afraid? Habakkuk chapter 3, verse 19. God, the Lord, is my strength. He makes my feet like the deer's. He makes me tread on my high places. To the choir master with stringed instruments.
Yo, what's up, everybody? Let me know if you guys can hear everything okay, see everything okay, as always. Hope you guys are doing well. I guess I'm under attack. I don't know if it's just by Instagram or something, but they're kind of giving me a hard time. Out of nowhere. Like, it just don't make sense. Bet you there's bitter pieces of shit that be trying to do what they always do. We'll see what comes from that, but yeah, hopefully you guys have had a good weekend so far. Let me see. You guys have any questions? Morning, Fritz, Tony, Z. Oh damn, really? It's kind of later in the day, huh? What is that? 3:20 p.m. That's an interesting. That's an interesting time. Fritz, you're in South Africa, right? If I remember correctly. Yep. All right, nice. Nice. That's where Elon Musk is from, right? It's from South Africa. Pretty incredible people come from out there. But yeah, so before we get into any real market discussion, let's actually go and pull this up real quick. Okay, so any of you guys that are new, what you can expect from this call, right? So you're gonna want to stick around if you feel this stuff's gonna be helpful to you. We have a full bias and narrative analysis going over many different assets. If you guys have a request for me to go over a particular asset, it could be a stock, it could be a crypto. A little bit towards the end of the call, I'll be more than happy to go over some stuff that you guys want me to look at, if you're not looking at some of these assets. But in a nutshell, by the end of the call, every single Sunday, we have an answer to all of these assets and what we believe they're going to do, or we'll have an opinion that we have to wait for more information. But by the end of the call, all of these bases get covered. And again, if you have anything extra you want to ask me a question about, or you have a chart that you want me to observe, maybe you have stocks that you like to trade individually, we could look at individual stocks, right? Whatever you guys would need, I'd be more than happy to help you with. And then of course there's lots of topics, lots of very deep things get talked about in these calls. So a little bit later we'll get into indices. That's the first, or the main priority, at least for me. But if you've noticed over the last couple of months, every one of these assets that are on this list, we pretty much walk them like a dog. Okay, like they, for whatever reason, dance to the tone we set. And it's pretty fascinating, really. But yeah, so last week was fun. We had our marathon. we did some absolutely spectacular things on these live calls, and I really enjoy doing it. So appreciate your guys' support. Uh, One thing I want to mention before we move forward, don't forget to like the video, subscribe to the channel. It really helps this channel with the algorithm that YouTube has. And I'm, for whatever reason, under attack. My Instagram is being limited for whatever reason. And I don't even share really much on Instagram. So I'm not too sure. There's really no explanation why. Um, I'm not like all these other educators who are flashing money and shoving it down your throat, claiming that you're guaranteed to be profitable. I have make it a real point to not do that stuff because I can't guarantee you anything, and none of this is financial advice. But even still, with me having that approach, you still get attacked. Maybe it's because I'm telling stuff that actually works. You know, because all these people that are gamblers feeding into the gambler mentality for whatever reason don't get blocked on social media or really run into any problems. But it seems that Instagram is trying to be giving me problems. So, um, you know, if I was to ever lose that account, I would just be here on YouTube, and I wouldn't have any other social media because I could really care less. And I can reach you guys here, right? We have a community tab. And this channel's growing, so yeah. But with that being said, again, risk on, risk off. Let me pull this up as well. Thought I had it pulled up earlier. Give me 1 second. Bear with me. So the very first thing that we're looking to decide or go over is risk on, risk off. We've talked about this before. This whole analysis can be labeled as a risk on, risk off weekly prep analysis to basically get your footing, right? What is price potentially going to do? Okay, what is this next week going to potentially bring us? And what do the other assets say about the asset we're looking to participate in, which is in this case the indices? What is the relationship that all the assets have with each other that then influences the indices, right? How about the dollar, right? How about euro, right? And anything else? How do the relationships around all the assets affect the one asset that you're trading? And this is, you know, a very simplistic concept. It's not too complicated. Determining whether DXY is going to go lower, whether indices are going to go higher, and kind of what allows for us to believe that for whatever asset, obviously, is where the complexities sometimes arise. But for the most part, you know, this should be fairly simple to understand. Okay? If you haven't taken a screenshot of this, I encourage you to do so. Okay? But all in all, we will have a determining decision by the end of the call for all these assets. And then again, whatever else you guys want me to get into, we can do. We can get into that. So yeah, with that being said, with that out of the way, a little bit of housekeeping, right? Let's actually scroll over here to the news. As you can see, we have a very quiet week. So it may be pretty tricky. One thing that you want to couple with the fact that this is a very quiet week is the simple fact that we have declined so aggressively in the indices, and we have hit significant sell side liquidity, and we had a large range that basically pushed us outside of the consolidation. Okay, and so that's also leading to no news. So because we've took that liquidity and it was so aggressive, large ranges lead to small ranges. So we had a very large range to get us out of that drop on the indices, and now we've fulfilled a higher time frame level. So whenever you see a large run like that that hits a significant level, and then you look at the news and it looks like this, you know, the week that's coming is going to potentially look to punish anyone that's looking to chase price, come out swinging for the fences. It's still July. We're in one of the, I guess the latter portion of the month. So expect that the opposite end of the monthly range can be priced in. It's going to be very interesting when we go to the indices and I show you where prices really went to, aside from the weekly low. We've been talking about the likelihood of the indices doing what they did for a while. Right? We also laid out possibilities if it was going to look to support going higher, but because we were in that consolidation, I'm really glad to see that we've gotten out of it. So we'll see where we go on the indices a little bit later. But again, the very first thing that you think of when you look at the news is Power 3. Okay, when you're looking at the news events, or just each day, and observing which news is going to take place on each day, Sunday and Monday, again, from the lens of Power 3, is accumulation, manipulation, accumulation and manipulation. The second and third day, so Tuesday and Wednesday, is expansion. We're up here though. And then Thursday and Friday, if we hit like a weekly target or some significant higher time frame level going into Thursday and Friday, you can expect the opposite end of the weekly range, or you can anticipate that being the case. Will it happen 100% of the time? Of course not. Does it have a high probability of doing that because it's literally engineered to do this? I think so, and you can not just take my word for it. You could go see this in the chart. Go get 100 examples and tell me that this is not what's happening. Okay? For any concept, go and get 100 examples before you think, oh, it's not happening that way, because I guarantee you, most of the time you're going to be pretty shocked at what you see taking place, and how repetitive and organized and precise it is. And it all comes back to Power 3. So when you're looking at the news, like I say every weekend, you got to think Power 3. And from the lens of that perspective, right, what role does each day have? Sunday, Monday, like I said, is accumulation, manipulation. Tuesday, Wednesday can set the expansion along with the high of the week if it's bearish, or the low of the week if it's bullish, ideally. Sometimes, if it's a very fast week, or if we're in a real hurry to get somewhere, because maybe we're really close to like a monthly target, a quarterly target, sometimes Monday can give you an aggressive repricing against what the narrative is, and then it sets the high if we're bearish on Monday, or the low on Monday if we're bullish. Okay, so that's a variation. There's nuances and variations to this stuff, but you want to go into each week thinking typical traditional Power 3. Okay, and because if you can observe that, everything you do comes back to Power 3. Okay, it's just the way it is. And again, you can go and look at many examples of this. I have many of my students who basically take screenshots from the monthly ranges. I tell them to do this. You outline the monthly direction, or you look at a candle that was clearly bearish or clearly bullish on the monthly chart, drop down, and then go look at those weekly candles, right? And then you break down those weekly ranges and observe it from the lens of Power 3 on the hourly chart. So you get the Sunday open, you look at Sunday and Monday, anticipating that it's accumulation manipulation, and then going into Tuesday, sets the high if we're bearish for the week, or the low of the week if we're bullish. On Tuesday or Wednesday, you map that out, you outline that, you identify that, and then Thursday and Friday, you try to see what PD array or liquidity pool it reached into. Something else I want to give in terms of context for this approach or perspective is the fact that when you see that manipulation, whether it happens on Monday or Tuesday, right, and it goes against whatever the narrative is that you're identifying, whenever you see that turnaround, you want to observe what origin PD array was reached into that set up that move. What news event was taking place on that day that may have been a catalyst for the manipulation and then the reversal that takes place, getting in line with the higher time frame narrative. These are all things you want to note in price. And if you guys want, I can give you an example of that when we get to the charts in a couple of seconds. Okay, because I can give you that. I give it to my private students. It's just a very basic thing, but there's very particular things you got to observe. It's not just in itself Power 3, right? There's other pieces of context that allow for that power 3 to be very, very familiar. Okay, so if there's manipulation, it's reaching to liquidity or a PD array. If you get the reversal, you're reaching for liquidity or a PD array, right? From a larger lens, a larger perspective. It's a fractal idea, so it does happen on like the hourly power threes. For each hourly candle, there's an hourly range. So it's fractal, but again, you want to focus on one piece at a time, right? One perspective at a time. But yeah, if you want to let me know in the chat if that's something you guys want me to show you guys. Good morning, Slim. Appreciate you hopping on, brother. But yeah, if this approach, if this perspective is something you want me to outline for you, so you can understand what I'm encouraging you to go study, and visually you'll get to see the importance. If you guys want me to do that, I can absolutely do that. But yeah, other than that, this is our news week. We're going to be heavily reliant on macros as we always are, but even more so in the coming week. Let's go look and see if there's any light news. What the hell is the filter? There it is. So we do have some news. We got a light PMI. That's interesting how it's not an orange folder. Normally it's an orange folder. So yeah, we'll keep tabs on the light news. Sometimes light news can do things, but it's just not going to be as violent as it normally is. You know what I mean? So yeah, that's essentially our outline of the news, what our expectation is, how you want to view the start of the week from the news lens without even getting to a chart. So you're already thinking or prepping yourself to get in the mode of, okay, I'm waiting for power 3. What could set up power 3? What does each day's role play within that weekly range? Okay? So yeah, that being said, do you guys have any questions before we move on? Get started with the analysis. Where's the filter for? I know, right? You saw how Trump was saying that he's going to start charging large firms that want early access to his opinions and things that he posts on X or on, what is that, Truth Social? He's literally charging firms $100,000 so they can have a direct feed to him. This is how incredible his announcements are. Like it's nuts, dude. It's insider trading for the world, right? Like he said, okay, insider trading, people don't like that. All right, well, let's bring the whole entire world if they're willing to pay. It's like getting a signal. It's being in a signal group with with the government, which is nuts. Oh yeah, no, we all know that he's well aware. They all do it though. That's why insider trading will never go away, because they all got their bony hands in this. They all weaponize and use the news and decisions they make to make money off the stock market. Everyone does it. So it's ridiculous how Trump's falling into that. He's never even really been a participant, but recently, in this term, he has been. Hey, it is what it is. It is what it is. It's crazy. Last week, show what insider trading is all. Yeah, shit. The whole entire time Trump's been president, how manipulated the oil markets have been, all that stuff. It's really shown the level of insider trading. I mean, when a president takes 4,000 trades in just 2 quarters, that is nuts. I don't even take that in 3 years, let alone 2 quarters. Like, that's insane. Like, dude. But of course, he's not doing it, right? Someone else is doing it on his behalf. But it's the markets. You know what I mean? It just is what it is. And luckily, we accept that everything's manipulated, and we have a ability to understand what the manipulation is likely telling us. while everybody's getting faked out. We've been doing spectacular from the call outs and different things that we've done on the live calls for the last, since February. January was a little bit slow. December was a little slow, as it always is, because all the holidays and the new year transition and whatnot. It's the start of the first quarter too, right? The early stages of the first quarter until we get into March, April, which again we've been able to, for the last 3 years, we've been able to call the low of the year. If you go back to the videos that I've done in January and February, well, maybe not. Well, yeah, January and February, we called for the shorts for the yearly start of the Power 3 for the year. We were bearish, as we generally are at the beginning of the year, aiming at some PD array that can justify the low of the year forming. And we called it at a yearly bullish order block last year. This year, we called it at a quarterly fair value gap below price, right at the end of March going into April. Again, you can go back and verify this. You don't have to take my word for it, any of you guys that are new. Many of you guys were here for that. Like, you saw me call it, right? So, and it's just been off to the races. So, there's a lot of conversation about AI having a hard time as of late. And again, none of this is financial advice. I'm not guaranteeing that you will be profitable by doing anything that I tell you. No mentor can legally guarantee, but if you have two brain cells to rub together and you spend some time here, you can make a pretty educated decision on whether this stuff is useful or not. But yeah, AI has been taking a huge dump lately. There's a lot of debt. Oracle is not doing very well, the company. They have exhausted, just like many of these AI companies, they've exhausted their cash reserves by going into massive debt to try to expand. And the market is really showing us in those assets what the vibe is. And I think it's going to be a little bit of turbulence, in my opinion, especially with the war. Trump said he's going to go all out. He doesn't give a shit no more. 2 military service members have gotten killed, and so Trump don't like that. And I think he's taking the gloves off. So we need to probably be prepared for this war to not end. It's going to be unfortunate because it's probably going to damage the midterms. I hope not, but we need people that are supportive of crypto, of the future economy, of things that are not socialism and communism, because that's not good for any of us that are traders. That is like a death blow to capitalism, and the markets are only as lucrative as they are because of capitalism, at least here in America. So, keep your eyes on these updates, because again, that could be either bearish signals or bullish signals, depending on how things go. But hopefully we get the war to be solved and things start to mellow out. But whether there's wars, whether there's economic turmoil or anything else, we're still able to come in here no matter what the condition is and find a setup and navigate price very effectively. Those of you that have been with me for so long, for at least 3 or 4 years, you guys have seen me navigate almost every condition possible. Obviously, there's going to be more stuff that happens, more things that we may not have experienced before, but we're going to get through them together. And again, I don't care what the circumstances are, we're able to go in there and find something. And 20 or 30 points is very easy to capture. So just keep that perspective in mind. If we get stuck in consolidation again, that should be your main objective. Just capture 20 to 30 points and get out. You're not going to get sustained price legs if we're stuck, right? Or if there's a bunch of uncertainty and all this other stuff. So get what it gives you and get out. Don't overstay your welcome. You could try to risk it a little bit, but take profit on your quote-unquote demo account, because again, the same financial advice. But take profit most of it after 30 points. If you do get offered 20 to 30 points, and then if you want to leave a runner on, like some of my students do, like Jen specifically, and a handful of others, you guys can do that as well, right? But again, you want to take most of it off, get most of your profit off, not profit, your position, right? Gotta be careful under attack. Um, but yeah, take what the market gives you, okay? But yeah, with that being said, let's get into our first layer of analysis, which is the bonds and yields. Let me see, I have respect for anybody trying to swing trade. I don't necessarily have respect, I would say. I would say they got balls, and they're willing to blow their whole account because Trump could say one tweet and you're done. You know, I guess that risk is still true for um, every style, unless you're position trading. But well, I mean, think about this too. All the analysis that we've done from the start of the year, how many trades have gone hundreds of points? In some cases, thousands of points, directly from where we identified on the weekly, monthly, quarterly chart, all the way to whatever their targets have been. How many times have we called trade setups from the higher time frame that have worked out? So I mean, you could technically have considered swing trading those ideas, um, you know, just from the higher time frame analysis and what we do on these Sunday calls. The risk is just too much because there's so much volatility as well for anyone trying to hold overnight, trying to like swing trade. Brokers are not necessarily too nice. You got to have like extra large accounts because of the volatility risk. They're starting to change, like with gold and silver, right? The margin is huge, right? They made it so not like any normal people can get in. Same thing with the oil and gas market, like crude oil, right? It's nuts. The leverage that's required or margin that's required these days because of the volatility. We'll look at oil a little bit later too, and natural gas and stuff like that. Yeah, they sure do got some steel balls if they're swing trading through all this stuff, through the wars and all that. But it can be done. And our analysis allows you to have that ability to be able to swing trade or do really whatever the hell you want. Scalp, swing trade, intraday, day trading, um, position trade long term, like I do in stocks. You got the ability to trade options because, you know, once you get the basics of options and understand that realm of things, you have direction being given to you in an easy to understand process. So, you know, you have like a lot of the battle already solved aside from the rules with options. But yeah, it all starts from here, okay? So on the yield market, again, this dictates or influences what the dollar is going to do. It's reverse correlated generally with the indices and the foreign currencies. The bond market does the opposite. Let me actually pull that up real quick. Okay. Oh, oh, okay. I see what I did there. See what I did there. I think I like this actually. I could just do this to flip through, and then we got the what is ZN? Is it the 10-year? Yeah, it's a 10-year. Yeah, 10-year ZF. Okay, so this asset over here is influenced or influences the dollar. These assets over here, so the bonds, they are reverse correlated to the dollar, positively correlated to, or well, yeah, correlated slash heavily influence the currencies like EU, GU in a positive way and the indices. So if this goes higher and you see that the indices are going higher, that's a heavy bullish market. If they're consolidated like this and you see that the indices and the dollar are having a problem trending as well, you know, a lot of times this is the reason why. You notice how the bonds have been going sideways, right? When you go to crap. Wait a minute. Pull up the currencies real quick. So yeah, when you go to the indices, again, we've had this consolidation. Well, if you take that consolidation and you go over to the bond market, and for a very similar amount of time, price has been kind of going sideways. The yield market has been rallying aggressively because there's a lot of stuff happening in terms of the conversation about interest rates. They're talking about potentially hiking rates. Preferably they leave them the same, but if they hike rates, just that conversation has had a very heavy negative impact. But again, on the, well, we'll get to the Nasdaq in a little bit. But you could see how aggressively it repriced lower, and how that's supported by this idea. Uh, we've had the bonds identified like this as a market maker sell model. We could see that that still has a chance to continue to unfold. So we'll just have to see how this breaker is treated, because that's what this is. And if that continues to go lower, we may be set to continue to see price go lower on the indices. We also have, do we have S&T there? No. And so no S&T really. I do kind of like this though. Sell side liquidity. Again, why is this asset important? Why do we spend time on this every single week? Why is it even referred to? Can't you just use the Nasdaq or the three indices and the dollar and that's it? Sure, right? You can do that, but you're missing a layer of correlation, a layer of underpinning to the marketplace, and the bonds and yields heavily impact what the currency and other assets like the stock market are going to do. Okay, so if that has an influence on the underbelly of these assets, why would you want to skip it? Yeah, that's a great way to put it right there. Tony said, because it shows what the money is doing. Exactly. The money in the country, the interest rates of a country, or what is that doing and what is the impact, right? So that's why this is so important. You can trade this asset too. This is actually more dynamic than the NASDAQ. Right, the NASDAQ is $25 per point, like a normal NASDAQ contract. This is 30, right? And it flies. When it goes, it goes. And again, this has a heavy impact on the dollar and the foreign currencies and the indices. So again, what we see here on the yields, right, we're pulling up into this rejection block. Right, we're having a very, very nice response off of that. Right, we talked about that a little bit last week. We did gravitate up into it. When price was down here like 2 weeks ago, I was calling for this to potentially be looked at. That was a liquidity void in there, so there was no liquidity. See the wick here, and there's no body laying over top of it. So what did they do? They rapidly went higher, which is something that we talked about real time. We talked about this being a market maker buy model. Got consolidation, accumulation, smart money reversal, first stage, or just distribution in itself. We do have this as a potential market maker buy model as well. If that's going to be the case, it's going to have to stay above this high to that low, preferably above this last up candle. We also have this gap in here too, the full gap you could watch. Something that you may not have noticed a second ago, but we have S&T at the lows here. Okay, if you move it around, you see that lower low. So if this is going to continue to go higher, assuming that the bonds are going to continue to drop, if they do rally up and continue to get above this high to that lows 50%, I'd say if we break this high up here, that may be a catalyst for this to be a small market maker buy model to simply come and wipe this out. And then depending on how it would treat that, if it does do that, that would decide what I'm looking to do probably for the next couple of weeks. But as long as this continues to stay like this, I think we tagged a little bit above this high here. It's kind of hard to tell, but I think we got a little, yeah, you see? Just barely above. So we got accumulation, manipulation that rallied up above that, and then it dropped. Now we're retracing. So we got to watch this candle here. If it's going to be bullish, we should start seeing the inverse nature to these opposing PD arrays. So if it's going to go higher, this bearish order block here that used to be pushing price lower, when price returns back into it, it should start to support price going higher. And again, if it doesn't, right, we get back down below it, right, it's just going to be more references to keep going lower. We do have the low extreme here to the high. So a lot of times when you see this consolidation type of behavior, what you want to do is map out a PD array that's at equilibrium, which in this case would be classified as fair value. Not a fair value gap. Sometimes there is a gap in there at midpoint. But relative to this range, equilibrium is fair value for that market. So a lot of times if price is going to return back into something like this, a PD array that's active in that area that aligns specifically with that equilibrium, especially if it's like an order block or something, which I believe we have right there, many times that's going to be significant. You also have a gap in here, lots of gaps. So we'd have to wait and see how this is going to react to this. But if it's going to be bearish and we're going to trust it moving forward, in order for us to confirm this is going to stay intact, it needs to respect this high. And again, preferably it respects this fair value idea that I just mentioned relative to this consolidation. Okay, if this was any other asset, if it didn't say the bonds out and it said the NASDAQ, I'd be thinking the same thing. Relative to the information that we're able to see so far. Friggin' chat, friggin' lips, so windy today, or yesterday. Let me see. Player sweep. Dirty game. I notice a lot of moves happen while America is sleeping, then done by 9 a.m. Yeah. Yeah, it's a lot of stuff that's been happening, that's for sure. Mind you, they know what times that they have to do things to have the least impact on the market, at least for U.S. traders. That's why it's every weekend that some crazy catastrophes happen, or big governmental moves. They always happen on Friday when the market's closed, right? It's kind of just the way it is, you know. So yeah. So that's what I will be looking at. We'll be keeping tabs on the buy side liquidity up here. And again, if we do break beyond the midpoint right here, we can actually map out the actual low to the high. We're at equilibrium. If we were to use that low, it's just a little bit more above. This high, again, is going to be very significant to me. Right, so I'll put a little light bulb above that real quick. Okay. So we wouldn't want to see that taken. Think about it. If this stop run turns to a shift in market structure, because that's what this will be, and we have respect being shown on this bullish order block, like this candle came down, respected it. If the next candle then displaces and we break above this, that's a change in state of delivery. Okay? Or at least an early sign. Not respecting the fair valuation of the equal or of the consolidation. Right? So it's not really respecting continuation characteristics. It'll more so be looking to maybe reverse and then try to come up into here if it chooses to not respect this and start to immediately break. And once we get down below this order block, that's just grounds for continuation. So any return back into it, we'd have to respect the midpoint. This will act as a BPR. This should be a balanced price range, which is why this midpoint fair valuation level should be significant. Okay, we have buy side, sell side, buy side, sell side. Buy side came down into this low, which in itself was also a previous balanced price range. Buy side, sell side, price came back up into it. And then now price is pushed away from it. So now that we're below this low, we're just going to have to wait and see how it's going to respond as we open up. There's no news catalyst to really do much this week. I mean, there's little slight conversations, but we'll see what takes place. Okay. And again, there is bullish SMT in here, so that leads me to believe that we may still see price continue to want to go higher. In order for us to confirm that, again, we got to see how it's going to respect this level. So if we go to the weekly chart, we can get high, low, higher high. So this wick in here is going to be significant. Isn't it ironic that that little void of liquidity I mentioned has been such a sensitive, useful level? I mean, look at the bodies. For many people, this is a little needle in a haystack right there. All right, most people see all this other stuff. They probably see this. They probably see these other things. But look at the precision with that. I mean, clearly that's an important level. And it makes sense. It fits the liquidity void description. It's a void of liquidity. There's no liquidity in that area. There's no candle, I should say, or offering buy side or sell side until it happened here. And then it referred back again and again and again and again. So, if it's going to be bullish, we have this high, low, higher high. That was a market maker buy model for the yields. So price should respect this with the SMT. Also the fact that this is a balanced price range. We came off this low. We're in a potentially larger market maker buy model, which on the higher time frame has a wick up here. Is it a weekly wick? Yeah. Oops, sorry about that. So with that being the case, this is going to be something that we're going to look to potentially target. All right. So going from this SMT, respecting this balanced price range, respecting the liquidity void, kind of inverting this level in here, showing really a lot of respect to it. We have a large wick with displacement. I don't expect price to come down into this, because we have buy side, sell side, and then buy side, plus we have big sell side, big sell side to buy side, creating a market maker buy model. And again, it just looks like it's bullish, right? This looks like a bullish breaker on this higher time frame. High, low, higher high. There's a gap in there, of course, but again, we got sell side, buy side, buy side again, and it spent a lot of time in there until it displaced through it. And the stop run took place. That had a huge response. All right, and there's conversations on the back end geopolitically about hiking interest rates or keeping them the same. So there's a lot of conversations on the back end that are also kind of supporting this continuing to run to the buy side. Again, this has an influence on the dollar, and it has a reverse influence on the indices and the foreign currencies. This asset here has a positive influence and a reverse influence on the dollar. So if we want to see a bullish dollar, bearish indices, we want to see a rapidly increasing yield market with a dramatically declined bond market. Okay, so the yield market, bond market. If this is bullish and the bonds are bearish, that's going to be bearish for the indices, bullish for the dollar. At least it has an influence in that way. And then vice versa, right? If we see the yields dropping aggressively and we have the bonds rallying aggressively, that is bearish for the dollar, bullish for the indices and foreign currencies like GU and EU. So you can start to see how significant this relationship is and why, again, we spend so much time on it. But essentially, with that being said, in a nutshell, I want to see if we can't get price to come up here. If that's the case, we should have dollar continue to reach for the buy side, and then continued sell-offs may occur as we march forward in the indices, but we'll see. Right? So do you guys have any questions about anything? Which format do you guys like, by the way? Do you like me having it split like this and then just kind of flipping through it, getting the gist of what the yield markets are doing, and then having the two bond markets over here, just flipping to whichever one we don't have at the moment? Or do you want me to have them both separate and do the analysis separately? Let me know in the chat. Give me that feedback if you could. It's nice like this, Fritz. Okay. All right. Well, I guess we'll keep it like this. Split screen. So Z, you talking like this, or you like them separate? Wow, that's interesting. You guys gave me really good feedback about it. All right, thank you for the feedback, you guys. Appreciate it. Maddie, Tony, Z. Okay, well, I guess we'll do it this way then. Interesting. Interesting. But yeah, the reason that you have the three bond markets, or the three bonds and the three yields, is because there's three intervals, 5, 10, and 30 year. And when you're looking at these intervals, you got to pay attention to SMT. Because if we got the dollar rallying, but you see, and dollars aggressively rallying, we got the indices dropping lower. If you see that stuff happening, but then you start to see the yield market have an SMT behind the 5, 10, and 30 year, that's setting up the possibility for a reversal to happen in the yield market. If there's a drop in the yields, again, they have a heavy positive correlation to the dollar, because the currency of a country chases the yield market up there. Every country operates this way when it comes to their interest rates. That's why they're so significantly important to understand later on. Now, for a new trader that's just learning and doesn't really know much about technicals and all that, this could seem a little bit advanced, and that's fine. But again, eventually you're going to become advanced and you're going to want to know these things. Of course, not everybody uses this type of analysis, but then again, not everybody is as accurate as we are, and that's okay, But I want to know that I know that I know. Okay, and for whatever reason, the process that we employ and understanding these relationships is massively beneficial to us. You guys see it from all the different examples. So the yields have a positive influence with the dollar. So if the yields go higher and the bonds go lower, that's bullish dollar. Bearish indices. That is when you're looking at market symmetry to confirm, say, a bullish trend on the indices. In that case, right, you're going to want to see the correlation with the interest rate market. So bullish indices would require bearish yields. Here's the symbols, by the way, so you don't get the wrong ones. Okay, so it's these 6 up here. Okay, but bullish indices, you want to have bullish bond market. So the 5, 10, 30 year supporting bullishness, or at least having an SMT at the lows that could later on promote it going higher. And you want to see a bearish yield market, because that will drag the dollar lower and the other assets higher. Right? If we go back to this idea here, this gives you a very, very clean explanation of that. The thing that I showed you guys earlier at the start of the call. Okay, bonds and T-notes, right? That's the bond market. Bond yields is this, right? So the bond yields is here. The bond market is here. Okay, this asset right here is what they're allowing countries to buy into the country with, right? You see how people say, oh, we're buying treasury bonds. That's what this is. Okay, so again, it's very, very helpful, very important market to understand, because it is a big player in terms of the underlying sentiment and conditions that we experience in the marketplace and what is potentially going to happen in the near future, right? It's really dependent on what's going to happen in the interest rate markets or inside the treasuries, right? The treasury bonds. And again, the most simplistic way you can view this is from this lens. Determining what is going to be bullish or bearish, though, in that specific chart, obviously is what this whole call focuses on, in terms of the technicals and the fundamentals and whatnot. But once you can decide what the DXY is doing, indices, or at least what they look like they're doing, what the commodities are doing, and then you decide what these markets are doing, you write it down, right? The DXY looks like it's doing this. The indices are doing this. The commodities are doing this. The bonds are doing this. The yields are doing this. You then look at your list, and then you determine, okay, well, this is the risk on, risk off relationship. Okay, this is what it typically does. There's no negotiating with this. Like, this is the reaction that happens in the market when one asset does something and how it influences the others. This is just the way it is. It doesn't matter what style you trade. This isn't like ICT specific. Like, this is the truth behind every concept when you're doing multi-asset analysis. Okay, so take a screenshot of this so you have it forever, and you burn it into your mind. So then when you do this analysis, it becomes more impactful. Along with when you watch these calls, it becomes more understandable. Okay. So again, do you guys have any questions about risk on, risk off? I noticed that I had some questions. So hopefully I answered the correlation question, Maddie. I appreciate you guys asking. That's how you started teaching. Yeah. Yeah, see, Tony, when you first came, you didn't know this stuff. You didn't know about these relationships. And now that you get that relationship, isn't it a lot easier to have conviction behind whether you're bullish or bearish on any asset that you're looking to trade, whether it's gold or the indices? Isn't it just clarity inducing, right? Instead of thinking, oh, it looks like there's higher highs, higher lows, so we should see the indices go higher. Instead of thinking it from that lens, we have a much, much deeper way of doing things. And you guys see, you see how accurate it is every single week. And for those of you in my private group, you know, you see it every day. So for years at this point, and now years on YouTube as well. Every Sunday I'm talking about this. You know, and then every Tuesday as well. We use the analysis from today into the next couple of days. Okay, all right. Glad that makes sense, Maddie. Yeah, so with that being said, where did my markups go? Oh. So yeah, again, we got SMT. I would really like to see, we really don't need this down here. Look at the quarterly, so the 3-month bullish order block. Look at how nicely that thing was treated. All right, price ran down into that, and it's just continued to hold that support in that area. Look how many times it tagged it or rejected it, right? Market maker buy model. We talked about a lot of this price delivery. For the last couple years, we've literally navigated the whole entire bond market from all the way. When did I start going public on YouTube? Was it 2024? I can't remember. I think it was 24. Was it 24? No. It's like 4 years ago I started posting content on YouTube. So, you know, I say all that to say that we've just been on this market like white on rice. So, appreciate the subscription, by the way. Glad you guys are getting value. But yeah, so that's my opinion. I'll just slap an eyeball in here. Right, if gun to my head, I would be wanting to see if we can get up there. And for the bond market, which again has a positive correlation to the indices, if the indices are going to keep going lower, I would like to see this continue to try to race for the sell side down here. And we got relative equal lows. We did kind of peak below it a little bit. We were calling for that also last week. We were calling for it to get down there. You see that I have this outlined. This was a bearish order block. Put it in the right spot. Okay. And then of course we have the high-low equilibriums in that area as well. So we got to see how that's going to be treated. But all in all, I'd like to see if we can get down to there. Okay, and again, this is the, okay, so that's a 5-year, 10-year, 30-year. So this is the 30-year outline. We got a reclaimed fair value gap in here. So that range needs to be respected. We got buy side, sell side, it's a breaker. So as long as we stay below this breaker level, we'll still be able to go lower. Is it going to consolidate in there? It very well could. You know, it very well could. But we'll see what happens. So something I want you guys to mark out on your calendar as well before we move on. I want you to mark out the July 29th day. This is going to be very, 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 very impactful. It's going to tell us what the federal funds rate is going to end up becoming. What is that federal fund rate? That is in particular this market here. Okay? This is the interest rate that'll get affected by either a cut or a hike. If it's a hike in interest rates, the stock market declines. Okay, well, that makes sense. But what is that hike actually doing? It's increasing this market. It's rallying in this market. So it deepens the justification and the fact that this is a fact when this goes higher and we see the indices go lower. Rate hikes will send this price higher. This asset, if it goes higher, will drop the stock market, or it makes it harder for it to rally. If this is cut, this will decline and the bonds will go higher. That is what you want to see when the indices go higher. To justify a narrative, if you're bullish and you want a supercharged asset or supercharged resource to allow you to trust that you're in a bullish trend, significant bullish trend, and like a bearish order block or buy side liquidity pool is being targeted, right? And that's your perspective. If you want to justify that, this is one of the greatest ways to do that. Because fundamentally at the core of the stock market, the core of the financial structure in the U.S. government or the U.S. economy, this rests at the center. Okay, that's why this is so significant, and why we talk about it for so long. Like we've been talking about this for an hour, right? Just this market and all the little intricacies that it affects. So I'm telling you, it's that important. I don't waste my time on concepts that are not important. You know, definitely not trying to waste your time. I know everyone wants to get to their asset, but again, you either want clarity or you want to be half-ass. Clarity allows you to have a lot more doors open up. Half-ass means that you're not going to be here that long, and it's going to be frustrating. So, could you use change state delivery looking at the weekly chart? Oh, of course. Of course. Everything that we talk about can be used on every time frame. It's all fractal, but it's relative to that time frame. So like, for example, this 2-day chart. Oh, well, you know, let's actually move past this before we get into that, just so we can have the other asset. But I hope all this stuff makes sense. This is my perspective, and we'll see how it goes. Okay, just throw the eyeball in here real quick. So we'll see how that unravels, okay? So hopefully that makes sense. So moving on to the dollar. We're just going to answer that question, Fritz. Of course, right? Change in state of delivery, breakers, 2022 model, whatever entry model you use on the lower time frame, whatever analysis you use on the lower time frame. If that lower time frame chart that you're doing that analysis on, if it wasn't the 1-minute chart and you just assume it was the monthly chart, you'd be looking for the same stuff. The only difference is the time in which things are going to unfold. So for higher time frames, the macro time windows are going to be like news events, red folder news events. When you're using like anything from the daily to the monthly chart, you also want to consider the middle portion of the month, or the middle portion of a week, or the middle months in a quarter to be some of the most dynamic. So because we don't have like the macro time window element essentially on those higher time frames, again, you default to specific times within a month. right? Specific times within a week, specific news events. So for like trading down into, for example, a weekly bullish order, a weekly bullish fair value gap, or a bullish order block, or a weekly bullish breaker, or you think it's going to draw into that, you want to make sure that you are using a news event to help justify the volatility and volume, or just simply interest, for us to get down into that level. Once it rests inside that level, you can also time when price is going to move away from it. Right? Many times they need a news event to allow for them to have enough volume or just enough interest on the part of smart money to then move price action. Because again, it's a higher time frame. It needs a lot of movement. It's not like a macro where we're looking for 50 points, 30 points, 100 points. You know, they're looking for thousands of points from these big time frame PD arrays. So you got to demand that you get a news event. Demand that you're in a proper time of the month. Demand that you're, you know, if you're using like a yearly perspective, demand that you're in a proper time of the year. Because again, because a year can be broken down into 4 parts. There's 4 quarters in a year. The first quarter is generally accumulation manipulation, which was on full display this year. Second and third quarter, the second quarter generally sets the low of the year. So the 2 middle quarters, the second and third quarter, are generally part of the expansion. And then once you get to the fourth quarter, right, price is going to give you that Christmas rally, but then it's going to come off that and then set the end of the yearly candle, or the yearly power 3. Just like how the weekly does it, right? But Thursday and Friday is the part of the week that turns against it to close off that candle, to set the opposite end of the weekly candle. Same thing with a month, right? The last week in a month is when you generally see the closing portion, or the ending part of that monthly candle, because it has to have an open, high, low, close for every candle. Because it has an open, high, low, close for every candle can be broken down into power 3 on every time frame. Every quarter also in itself has a power 3. There's a quarterly candlestick, right? Right? There's a open, high, low, close on this perspective as well, right? So what happens? If it's bullish, it's going to open, drop down, rally, close off the high. Right? Open, drop down, rally, close off the high. So the ending portion of the quarter, the last week or last part of the month, in the last quarter, or in the current quarter, right? Like the last month, or sometimes even just the last week of that quarter, generally can give you the pullback to set the ending part of the quarterly candle, right? It's the same for all these candles. So you can break down things from a quarterly perspective as well, from the lens of power 3. And think about it. If you can get a quarterly power 3 mapped out, if you can, get the 3-month time period, right? Go from the quarter's beginning to the quarter's end, right? And you draw like a time fib, something like this. Okay, where you could break it down into quarters, right? 1, 2, 3, 4 parts, right? This tool right here, is that the one I'm using? Yeah. Yeah, so this time fib zone, you can go from the start of the quarter, which is generally the midway through the quarter, or midway through the month, like in March 15th through the 18th, depending on when the open interest on bar chart eclipses the previous quarter's open interest. That's when you know it's a new start to the new quarter. So you take the time fib here and you measure it all the way out to the next start of the next quarter, the front quarter, right? The one that's next. And you get that little range. And then when you do that, you're able to then break down the quarterly range, or the quarterly candle, into 4 parts. The first part, or the first week, first month, essentially, in the quarter, could be accumulation and manipulation, right? Aim at a PD array that it's reaching for that could give you the response to continue. Once it reaches down, and we get into these middle quarters, or middle parts of the quarter, you could then expect that there should be some kind of expansion behavior. right? Unless the quarter is going to be a choppy shit show, which sometimes does happen when there's a lot of stuff happening. But those are nuances, right? The main objectives is to observe and navigate price in this way from the lens of Power 3, breaking things down into segments. So then you can identify, okay, which part of the quarter are we in? What does that part represent generally? If you're in the middle, again, it's the expansion. Just like in the middle of the week, it's an expansion, Tuesday, Wednesday. And then Thursday, Friday closes the week. And it pulls back. Same thing here. If we get to the latter portions of the quarter, many times it's going to present you with something like this. Okay? And like hypothetically, let's say the open of the quarter was right here. Well, we have accumulation, manipulation into a PD array. Okay? Price hits it, then rallies up, and then you get expansion through the next two. The next two parts of the quarter, right? So, the middle two parts when you break it down to quarters, and then you get that last portion, which a lot of times will result in this being a closure off the upper level. In this case, if it's bullish, right? So this is what you would like to anticipate quarter to quarter, right? If this is a bullish quarterly candle, this is what I would like to see within the 3-month span that quarter represents. And I said break things down into quarters, right? Like that means 4 parts. So there's 4 quarters in a year. You could do this same idea with every quarter. And again, you get this perspective. You have a bird's eye view of what could potentially happen sentiment-wise. And then you also can go into each month and do the same thing. Start of the month, end of the month. Break it down into 4 parts. The start of the month has accumulation, manipulation, distribution in the middle, right? Or accumulation, manipulation at the start, distribution in the middle 2 weeks for a month, and then the last part of the month should be a reversal, right? It should close off the month. And that happens 3 times within a quarter. And inside that, the specific quarter that we're in, whether it's a first, second, or third, or fourth quarter, you can break that down into 4 parts as well and have this perspective. So you can see how deep Power 3 gets. I tell you guys all the time, and I try to burn it into your guys' head, those of you that are working with me on a one-on-one basis or are just here on YouTube. Again, everything comes back to Power 3. Every question you have, every tactic you use, everything that you discover in ICT's concepts will automatically be inside of the box of Power 3. Market maker models are in that same category, right? Everything that you learn can fit in these 2 styles of market navigation, because this is the market, right? I don't care what nobody says. What we show on a regular basis, what ICT has taught, what some of the best traders in the ICT space claim, is that everything comes back to Power 3. Power 3 is a foundation. Eventually, market maker models become an even further advanced part of that foundation because things run in phases, right? There's different segments in price that the algorithm works off of. And again, it's all based on liquidity and inefficiency and any other nuanced details or PD arrays or levels of reference, right? They're extra. They're added extra pieces to the detailed picture that we paint in the marketplace. Okay? So I want you to keep this stuff in mind. These are things that you can individually go in and study. And you just keep it simple, right? Wherever you see the manipulation happened, when you break something down into a quarter, right, or quarters, you look for where that response came from, right? How long did it take to accumulate? Where did it manipulate to? How aggressively did it reprice away? Where is that repricing at? Is it in the middle part of a time interval that we broke down into quarter parts? And then what about the retracement that took place after the expansion? Where is that in terms of the time interval that we're looking at? And where is that inside of the quarter that we just identified, right? In terms of the first part, second, third part being expansion, and then the fourth part being the retracement. So yeah, I want to make sure that I get this confirmation from you guys though. But does this make sense? Does this make sense on how every time interval, even if it's a yearly chart, even if it's a 5-year chart, all the way down to the 1-hour chart, even the 15-minute, Does all that stuff make sense? How you can go ahead and start to break this down and think of things from the lens of power 3, right? Do you guys see? You see that? Maddie said yes. Fritz said yes. Okay, good, good. I'm telling you, this may seem very simple to some, but it's so helpful when it comes to price navigation. Again, the whole slogan here is getting you from confusion to clarity. I will go out on a limb and say that just this tactic here kind of in an obvious way shows you how you could start to gain clarity in navigation and understanding as far as what is price doing, where are we at, which part of the month are we in? Are we in a part of the month or week or day that can be classified as a potential accumulation? Are we in a phase where it can make sense for it to be manipulation? Is there logic around that manipulation that could lead to the expansion? How big was the expansion, and what part was that expansion in? Was it in the middle part of the time interval that we're looking at? Like if it's an hour that we're looking at, you get 4 parts of the hour. Are we in the middle of that hour that's promoting the continued expansion? Is it manipulating in the beginning of the hour, reaching for a particular liquidity pool or inefficiency? And how about when it turns around, right? And we see a retracement if we're bullish on that hourly, 4-hour, monthly, weekly, whatever time frame. Is that retracement happening at the latter portion of that time interval that we're observing? Right? Maddie, I like you giving the explanation of why it makes sense. It gives overall context for what we have to look for at the lower time frame. Dude, exactly. Exactly. It helps you see the picture a little bit better instead of just thinking, I'm looking for a 1-minute stop run and I don't know how far it's going to go. Looking at it from this lens, you can kind of gauge if we're in the expansion phase and there's a clear target, right, relative to the time interval, you still probably have a long way to go, especially if you're a swing trader. This is part of the perspective I share when it comes to swing trading. I've taught many swing trading models to multiple students over the years as well. I'm a day trading scalper. I like to get in and get out. But because we're effective at that, and the market is the market, price is price, you're able to transition that to other styles of trading. But I like what you said right there. It gives you overall context, at least a piece of the overall context, and it helps you kind of navigate that lower time frame with more conviction. Because if you're in an expansion phase, what's the point in being worrisome about a retracement that's aggressively going to upset the narrative if that's not even what phase we're in, right? Things are very systematic. You can anticipate stuff. And if that wasn't the case, we wouldn't be able to be as accurate and as consistent as we are on a week-to-week, day-to-day, month-to-month, and now year-to-year basis, right? Quarter-to-quarter basis. You know what I mean? So I'm glad that stuff makes sense, okay? So one thing that I'm looking at here for the dollar, let me actually remove that. I think that's a wick right there. And so that's that wick. What happens if I erase that? Okay. So yeah, this here is that monthly wick. We can see that we're resting inside that middle portion. We have came back and we're inside this bearish breaker. So we do have somewhat of a reason for this to want to go lower. I would say that if this displaces through this level, right, we get down below the bearish order block here, right, if it does break through that, especially if this breaks down and closes below this wick, that would set us up for an even deeper run for a more longer term sell side delivery. But this just simply looks like a breaker that is retracing and may look to try to go lower. I would honestly like to see, given that the yields are still aggressively moving higher, I would still like to see if there's a reason for us to get up into this monthly fair value gap. If we cannot do that, say, from this level, we get a small retracement again, and then price ends up displacing aggressively, we may have to consider once we close below this, and if this becomes a bearish order block, which if it closes below this, it will become a bearish order block. So we'll have multiple shifts taking place to the downside. What makes me worried a little bit or concerned a little bit about the objective up here is the fact that everybody and their mama, I'm sure, from the retail crowd sees this as a bull flag. So wouldn't it be perfectly characteristic for them to say, okay, well, everybody thinks bull flag, we've been consolidating, there's people waiting for the breakout to the upside from a retail lens. Let's upset them. Open up, maybe attempt one more time, but fail, and then break down below this, and then try to take out this low, right? And then that would be justified as well inside of this idea here, right? Being a bearish breaker, simply a retracement to then go lower. It's been a lot of wicky behavior from this quarterly chart. It's been a lot of back and forth. Gravitated to the upside, but it's been a lot of back and forth. And if I can't also say that if this quarter, when we go into the new quarter, the next one, if we do close lower like this, if you take a look right here, we have a rejection block that'll be forming inside of the bearish breaker. So that may be giving us some insight, especially if this was to displace through and close below this candle. We got an insight in that regard for price to want to target sell side liquidity. Okay, if this quarterly chart here was a 5-minute chart, what would you be thinking? This is one of the greatest things that I personally have discovered as a mentor. Like, this is one of the greatest perspectives that gets students, for whatever reason, to really focus on the fractal nature of price and how things on the higher time frame are really no different to the things that you're looking on the 1 minute, right? If this was the 5-minute chart, what would you be thinking? Let me know in the chat. Aside from anything that you've heard me say, what would you be thinking based on what you see price doing in here? If this was the 5-minute chart, be honest, right? Try to be as honest as you can, because I want to make this a helpful experience. Yeah, Fritz, right? Fritz says sell. Suman? I hope I'm not butchering your name. He says short. So yeah, it simply looks like a retracement. We have displacement, retracement into that to go lower. Bear flag, right? So on the daily chart, it looks like a bull flag. On this quarterly chart, it looks like a bear flag. And it's very reluctant to displace. And we still have this whole entire gap up here that it could reach for. Because we have this as a breaker, though, a breaker, what is the characteristic of a breaker that would justify this not being filled in? Let me know in the chat. I appreciate you guys being interactive with this, because I mean this is very helpful for you guys as well as for other students as well, and it really shows me that you guys know what's going on. Okay, so with the functionality of a breaker, the characteristics of a breaker, what would deny this ability for price to want to come up here? What would make this not really that likely to reach all the way through that? Short to reach relative equal lows. In bearish breaker, it should respect the lower 25% to max consequent encroachment. Why is that? You're right on the money, Fritz, but why is that? And that's a true statement when it comes to other PD arrays too. But why is that what we would like to see? There's a function behind the reason for why that stuff works out and why we look for that. Do you guys remember? What is a breaker? What's another name a breaker can be called by? Fritz, it's a form of BPR. Exactly. Exactly. Same thing with order blocks. Same thing with mitigation blocks. Same things with inversion fair value gaps. They're all forms of balanced price delivery. That's why they get respected in the lower 25 to 50%, and they run, right? That's why when a fair value gap that gets inverted, we don't expect it to come beyond the midpoint of that inversion fair value gap. Why? Because it's a BPR. How about an order block? When price goes higher and then breaks lower, and we want to see that order block be sensitive, why is it expected to be sensitive in that lower half? And if it doesn't respect it, right, it gets invalidated. Why is that the case? Because it's a balanced price range. It's a form of BPR. So because that's the case, if it violates the midpoint or comes up and inverts this fair value gap here, instead of leaving it open, it becomes potentially invalid. We want to see stuff get left open if we're going to trust that it's going to keep going lower, especially if there's another PD array that's more significant. So one thing I want to point out as well, in the same breath of this, is something I shared with my private group a while ago. The PD array matrix. Okay. Whoops. A lot of people think they know the PD array matrix. Most of them don't know. The PD array matrix is not just a list of. It's not just a list of PD arrays. Okay, why did he set this up like this? Why is it in such a specific order? Well, that's because certain PD arrays versus others get seeked by the algorithm with more interest, right? Or they're looked at first in relation to the others. So if there's a breaker or a mitigation block that's present, and you have a fair value gap or any of these other PD arrays that are inside that range of the breaker or the mitigation block, price is almost always 95% of the time going to mainly refer to that breaker or the mitigation block. And most of the time it's going to leave these other PD arrays available if they're inside the breaker. Why is that? Let me hear your guys' explanation. And Fritz, I'm sure you know this. You may not even know or realize that you know this, but you know this. Why do these get left available if they're present with a breaker or mitigation block? Say it's up in here. Why is that? Let me know in the chat. This is a very powerful lecture right here. Like this piece of this, because most people don't know this. They wonder why things get left open. But yeah, let me know in the chat. Why would that be the case? If price seeks these PD arrays and you have a breaker or mitigation block like it is here, why would it not want to look for any of these other PD arrays if they're up inside the breaker range? Sometimes they, like with fair value gaps, they will kind of hit them a little bit, but that's when it's very volatile. But most of the time they get left open. Why is that? Because this is an answer to why certain PD arrays get left available as well, right? If they have a couple of them in the same area and one gets left available versus the other that gets utilized. Okay, maybe because the breakers, mitigation blocks are made up of multiple. So you answered something earlier that I said was correct. That same answer is the answer to this. So what was that answer you gave earlier, Fritz? So these would be left available. No, see, mitigation is thrown around too lightly. It's had nothing to do with mitigation. There's a lot of people on the internet that talk mitigation this, mitigation that. They have no fucking idea what they're talking about. They really don't. So watch the people you're watching on social media. It's nothing towards you, Maddie. I've had to untangle stuff around mitigation so much over the years with students. There it is, right there, Fritz. Yes, the fact that it had formed a BPR. So the breaker itself is a BPR. So if that's the case, and there's a fair value gap up here or an order block up here, again, if the breaker's there, the PD array matrix, if a breaker's in line, holds precedence over all these other PD arrays that may be present in that same price leg. So if you see a breaker with a fair value gap and you're trying to identify the 2022 model and it never reaches your fair value gap, this is why. Because the breaker holds precedence over the fair value gap or the order block or the liquidity void or whatever else is present in price at that moment. Because there's an order. It's an organized hierarchy of PD arrays being seeked. And a couple PD arrays come before others. And the breaker and mitigation block are the very, very first in that list. So if you ever see a breaker and mitigation block present, that's always going to be the one that's most important out of all the PD arrays that you see in that price leg or in that idea that you're trying to observe. So this is yet another reason that I have mentioned that the breaker and mitigation blocks are my favorite entry pattern. They're literally the first ones that I used, and the main ones that I use every single day. And there's 4 ways to get into a breaker, which is another reason why I love them. But aside from that, this is one of the clearest signs as far as why the breakers are so significant and why every trader should consider thinking about the breaker. Because many times the breaker being present is going to be the main reason why your fair value gap doesn't get traded to. And why is that? Because a breaker is a balanced price range, right? If there's an inversion fair value gap down here and there's an order block up here that you're reaching for, fair value gap comes before an order block. So the fair value gap will be utilized instead. That's a good question. But how is it a BPR? So price went higher and then went lower. So would you say that buy sides offered and sell sides offered in the most simplistic terms? If you see price go up and then down, breaking that low, would you say that buy side and sell sides offered in that point of price, especially if stops were taken? Would that be a visual representation of buy side and sell side being offered at the same time, assuming that there's no liquidity voids or things like that where there's gaps that have no price delivery? Assuming that that's not present within the price leg, because if there is like a liquidity void up there where there's like a wick and then just a gap that has no candles inside of it, that puts this breaker at risk. But would you say, aside from that, right, assuming that that's not present, would all of you guys say that if you go higher like this and then price goes lower and it breaks that low, would you say in a simplistic term that that is buy side and sell side being delivered with a stop run on top of that, which makes it more powerful, right? Would you say that buy side and sell side's offered there, right? This being buy side, that being sell side. Let's throw one in the chat if you would agree with that statement. When you see price go higher and then lower, if it breaks that low, would that be considered buy side and sell side being delivered? Yes. Okay. Well, can I call you Suman? I'm gonna call you Suman. It's a little easier. I think you answered your question right there. How is it a BPR? Because buy side and sell side was offered. How is an order block a balanced price range when it closes below it? Because buy side and sell side's offered and we get below that open price that was the origin of the buy side delivery. How about an inversion fair value gap? Would you say that buy side's offered and sell side's offered? Was that entirely overtaken, right? The buy side, was it entirely overtaken when it went lower? If the answer is yes, you answered your question on that as well. If any of you guys had a question, why is an order block or an inversion fair value gap classified as a balanced price range? Mind you, this is a huge leap forward in your understanding about these PD arrays, and most people don't understand this. They can't tell you this stuff, right? How about this? How about when price goes higher and goes lower, and you got a market maker sell model that then eventually closes below this low? There's a PD array up here. Okay? How about this, right? When price goes high, say this is like a daily retracement into a daily order block. What the hell was that? Right, how about this, right? When price offers a buy side of the curve and then sell side of the curve, and then it eventually takes out the low. Would all of you guys agree that buy side and sell side has been offered from that point? And then once we break this low, both sides have been offered. Would you agree with that statement? Let me know in the chat. One, I'm assuming yes. So with that simplistic logic, because it doesn't have to be rocket science, okay? This is, in a nutshell, why or how you can classify certain stuff as balanced price ranges. How about this? When there's a consolidation, take stops, and the rallies up, would you say that this whole entire range offered buy side and sell side and then left price action to the upside, creating a BPR, right? Would based on what I just described, would that visually represent a balanced price range as well? And should it be reasonably expected that the midpoint of that shouldn't be violated unless it's going to go lower, right? If we're bullish, this should be respected, right? And that should be classified as a balanced price range, correct? Let me know in the chat if you agree with that statement. Yes, correct. Exactly. So what did we just describe here in a couple of seconds? And I hope that all this stuff made sense. But what did this explanation just highlight to you? Order blocks, fair value gaps that get inverted, breakers, completed market maker buy or sell models, or accumulation that leaves the accumulation, right, and returns back into it. All of those, and then of course leaves, right, assuming it respects 50%. All of those things are variations of BPRs. And it gets even further, we can go even further than what I just described. But I think this is enough for the scope of this, this explanation. But that just literally showed you a depth of understanding about balanced price ranges that most people have no idea about. And how do you know that they don't know about it? Because they don't talk about it. Because most of these people don't know what they're talking about. Okay? But now all of you guys that are on this call now know. And you stuck with me this long, so I figured I would give you something that, you know, I talk about here and there, but you know, that should give you a huge leap forward and give you conviction behind certain things that you enter. And it should also give you a reason to get out of trades if it doesn't support this criteria, regardless of which model you use: inversion, fair value gaps, order blocks, the 2022 model, breakers. When we leave a consolidation, when you're looking at Power 3, this is another reason Power 3 is so incredibly powerful as well. Because think about this. When you got accumulation, manipulation to a PD array or liquidity pool, distribution, rebalance, redelivery, what is this whole upper price delivery being classified as? A balanced price range. So what happens when you see this unfolding, when you see these characteristics? You should expect that this upper part should be balanced, especially if, you know, this is like a daily low. We have a daily fair value gap up here. All right, let's say this is like the 1 hour chart. We get like one daily candle here, and then you get, you know, a bullish daily candle that rallies up, hits a PD array, and then you get the distribution candle going lower from that PD array. Maybe it's a fair value gap, maybe it's an order block, but you got your Power 3. Right? Again, this is a fractal idea. This happens on the lower time frames too. And of course, the higher time frame ones are going to be more significant when it comes to the narrative and how big the move becomes. Okay, and the lower time frames are a little more short term. They're always going to submit to the higher time frame. So you may see sometimes the balanced price ranges you outline fail. But that's why it's so significant what we do on these calls every Sunday. Because I'm teaching you how I determine where price is going to go, so that we could trade and have an opinion in those directions, and then get away from some of the times when you know, the typical trader will be incorrect. Even the ones that are in the ICT community that just simply don't have this type of understanding, because they don't have the experience. You know, they don't have a depth of knowledge. So that's what we have right now in the current daily price. Yeah, so all of this in here, right? We have this big range in here. You notice something in particular about this range. We got this high to that low. Let me move some of that. So yeah, this is going to continue to be bullish, right? We're trapped in between two levels. Look at how precise the middle part of this balanced price range, once it left, look at how precise price stopped right at that level. Right? We talked about this a while back, you know, as a balanced price range. A little bit over here, we talked about the upper 25% if it was going to keep being bullish. Mind you, a lot of this stuff we've already talked about, but I know some of you guys are new. But the upper 25 was being respected. So when the breaker broke this, right, that was very significant, right? And it allows us to now consider the fact that price may continue to drop and then disrespect this balanced price range. We do have this level down here, which would make sense. if price was to close below this level on this quarterly perspective, right? Early signs will be us seeing this get respected. If we see this level, which is a monthly fair value gap as well, get left open as well, if it can't get up there and we leave this rejection block, when we close below this candle or get below this wick midpoint, that would be a longer term sell side interest. And then if we close below this midpoint of this previous balanced price range, that's going to become a problem for any type of interest to go higher. For now, though, it's respected it. We also had a rejection block here that we talked about. Price respected that as well. It's a quarterly fair value gap. It's been respected as well. So we're trapped in between a couple of schools of thought here. The bearish breaker, right? It's kind of, reaching towards the center of this high to that low. How close are we to equilibrium? Very close. So that fair value gap is within equilibrium. If we lose that fair value gap, this balanced price range will remain intact because we'll have never have really broken through it to invalidate it. Again, this is a long-term perspective. So it's not something we're going to refer to every day, but it's absolutely something that is significant. But for now, what we're going to be looking at is that breaker. We're going to continue to monitor how that gets respected or not. And we have this fair value gap up here too on the monthly. If price is going to decide to respect this retracement here, which is another wick. You see how I have that outlined? We've had that there for a while. So as long as it stays above this level, we may still continue to try to see price support buy side delivery into this gap up here. This technically should get left available because what did we just talk about a second ago? It's an inverted fair value gap. Not only is it an inverted fair value gap, but it's also a fair value gap that got inverted with one candle. That is a very strong indication that it's balanced. Doesn't mean that it can't reach up into that a little bit. It could still reach up to there, tag it, because we're in that large breaker, and then still go lower. But this is a very slow moving process because it's such a high time frame. So you got to have patience. And many times you have to keep this on the back burner if it's not doing anything very significant at that time that influences the intraday volatility you're looking at. Because it could be bearish overall, right, on a quarter-to-quarter basis, year-to-year basis. But the different weeks can have different biases, right? They can have different objectives. There could be bullish runs in a bearish trend. That's not only true for these larger time frames, it's true for like the daily chart and the weekly chart. If the weekly chart is bearish, you could still have a bullish retracement. And sometimes you'll get thrown off. But if you can anticipate that it's a retracement, you can lower your risk. And you can be less fever pitched to, force things in price. Okay, so let me make sure I see a lot of questions. Those are built within defined ranges. That's the main reason. Midpoint of accumulation. Yeah, we discussed that. Depends on what curve. Yeah, I agree. Leon? I'm gonna call you Leon, bro. I can't say your whole name. Yeah. See, even a lot of people are recognizing it. Just because people sound good on social media doesn't really mean, especially if they have big followings and whatnot. Most of the time, they're just getting their success off of attention. And I'm not flashy, but what I do here, what we all do here, those of you that stick around and spend a lot of time on these calls, I think that the skill set is flashy enough. We're just in Q3 of the year. I see some, for giggles, yearly chart looks very bullish. Yearly, let's go look at the yearly chart. 12 months. Yeah, look at that. We're pulling into a yearly bearish order block. So again, it really depends on what they're going to do with the interest rates. Like we talked about in the beginning stages of the call, if they hike interest rates, the dollar is going to fly to the upside because the yields are going to be dragged up. And so that's going to put pressure on the upper buy side liquidity that we've had outlined. If they cut rates, dollars going to drop because the yields are going to drop. Okay? So that, and again, on the 29th, we're going to have that deciding factor for now, we're just retracing into levels that are going to have to make a decision. We got big things happening on the back end of the U.S. economy. So, that's why I mention it a lot this year about interest rates and what these markets are going to do, because it's going to really have heavy impact. Dollar could be dropping lower, but once they hike rates, it can hit a bullish order block like it did here. Notice what we're doing right here, right? We're trapped on the yearly perspective in between this bearish order block and this bullish order block. We're literally trapped, tapping into both. So we're kind of stuck, kind of coiled up. You know what I mean? So it's going to be very dependent on what happens in the coming months with how they decide to operate economic policy. But we're going to keep tabs on it. And longer term, anything can happen because of wars and all that. But that doesn't have any real bearing on whether we can find things intraday, because we're not only good with long term, we're also good with intraday volatility and short term ideas, aiming for very short term liquidity pools like hourly ranges and 4-hour ranges, daily ranges, 15-minute liquidity, session liquidity, so on and so forth. Session power 3. Every session also, by the way, has a power 3 that operates. So London has its own power 3. New York session has its own power 3. AM session and PM session, they both have a power 3 that's operating the larger one. But when you break them down into sessions, each segment, right, they all have their own power 3. Okay. Like for example, you can get, however long the session is, whichever session that may be. Maybe it's like, 6 hours, 4 hours, whatever the session hours would be in total. You could take that whole entire range and then project the quarter breakdown, right? So you go from the start to the end, split it into 4 segments, and you could identify power 3 characteristics happening relative to whatever time frame fits the size of that range or the size of that session. Manny said, if we draw quarters from 2018 low to 2022 high, we're in equilibrium. We're in equilibrium, which aligns with the breaker on the 3-month chart. Yeah, I've seen that too. That's for sure. If you go from this low even up to that high, you said 2018 down here. This is the most recent swing low, so rather than this one, it'd be best to use the most recent, most energetic price action, right? So the swing low here and this swing high here, when it retraced, that's a good observation, right? We're right at equilibrium. What do you guys know that I talk about when it comes to being in the middle of equilibrium in a higher time frame range? What generally happens to price action when it just refuses to try to get out of that equilibrium point? What does that promote when we're in that position in a range, especially on a higher time frame? It's fractal, so it happens on a lower time frame. But yeah, exactly. It has a likelihood of consolidating, not really having too much of an aggressive interest to trend. Okay, so we may see something like that happen here. It may continue to bang around, and the dollar the dollar's under attack. The whole world is trying to de-dollarize. Okay, and we have the least amount of dollars that have been held in the history of the dollar, in dollar's history. So that's not necessarily the greatest thing for the financial system in the U.S. and us being the reserve currency. That's under attack as well. So, depending on how things go, this may end up becoming a target. Especially if this breaker holds up and we break this low, my attention will immediately go down to there. I really just have to see us respect this fair value gap, this breaker, and then see us close down below this candle and the midpoint of that wick. And in that case, we'd be able to start looking for the lows here. If it breaks that low, this rally up to decline. What did we talk about earlier, right? When price goes higher and then goes lower, what does that create once we break this low? Or what should it create? What can we anticipate has been created when price breaks that low, if it was to break that low? The same idea would be true if this was a 5-minute chart as well, or any other time frame. But this is the quarterly chart, right? What would we classify that range as, right? When it goes higher, respected this, and then breaks down, offering buy side and sell side, and then taking out that low. What would we anticipate that would become? Talked about it a lot. So let me know in the chat. Yeah, BPR. Exactly, Maddie. Exactly. 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 I like what you said there as well, Fritz. Market maker sell model. Exactly. Once you breach the midpoint of this, which is why I'm highlighting this wick here, once you breach the midpoint of that, that confirms from what I view in price, it confirms this as now a potential market maker sell model, with the breaker being the origin PD array or the smart money reversal point, because there's always going to be an origin. There's going to be a PD array or liquidity that gets targeted to set up the smart money reversal, and then the origin should get targeted as a result of that. And then once you complete the origin in a market maker model, when it returns back into it, if you take the low to the high of the buy side of the curve, or the whole range of that market maker model that was completed, because it's a BPR, we should not see the 50%, but preferably we want to see that lower 25% be respected. And if you continue to see that, what is order flow? It's bearish. And if it's the other way, our price goes lower like this and then goes higher, and then returns into that, that in itself, 50%, 25%. So basically this whole space right in there should not be traded through on a closing basis. It could wick through it, but the bodies tell the story. The wicks do the damage. Wicks are all manipulation in general anyway. Okay? So whether it's the sell side manipulation to go higher or the buy side manipulation to close off the range and come back into the range that was created, that we're observing, right? Man, we've got real deep into balanced price ranges today, so I hope you guys have been getting value. If you guys have been getting value, don't forget to like the video, subscribe to the channel if you haven't already. We do this every week. We just go further and further and further, show week after week after week after week how consistent and accurate this stuff is, and how ridiculous people on the internet are. Because most people don't know what they're talking about, unfortunately. Right? But hey, I guess everybody's got to eat somehow, right? And entertainment can be pretty lucrative. But yeah. So again, hopefully all this stuff makes sense. And yeah, let me know in the chat if you guys have gotten value from this so far. Just put a 1 in the chat. Okay, Fritz. Thank you, Fritz. Let me see if I miss any questions. DXY on the weekly has huge wicks on both sides. That's going encroachment of bottom wick is respected. Yeah, we'll have to just obviously wait and see. Let me actually take this out real quick. Let's get a little bit more familiar here. So yeah, all that logic that I just described to you, now let's start to see this as we go lower in price. Oops. Oh wait, no. We'll keep it like that. So if we take that logic and we take that perspective that we literally just went really deep on in terms of balanced price ranges, and we look at the current price from the weekly chart and start to try to narrow our focus down into what we believe price could potentially do for this next week on the dollar, we have buy side here, sell side, displacement. We have buy side, sell side that failed. We already took stops here, and we have big displacement. What did we classify this as? The buy side, sell side failure swing, and then rapid rally up. We talked about this being a market maker buy model, so we've been in line with that. We've been calling for the upside delivery all throughout this. Then we got this monthly fair value gap as well as a possible target. But what kind of PD array is this? From this low, high, failure swing, break above that high. Let me know what that PD array is, for those of you that remember. Right, when price returns down into this, what PD array is that? If you guys don't know, you could just say I don't know. But this whole range in here, this whole delivery, that's a PD array in itself. So what is it? I appreciate you saying that, Tony. Yeah, we definitely have gone very, very deep. Empire FX, you're going to have to watch the whole video over again. We've talked about way too much. Okay, so Tony said breaker. Anyone else have any other assumptions? So overall, with price going higher from, because mind you, I mentioned this low, this high, and that failure swing. This low here being taken out, and then price getting above it, that is a breaker. Okay? From this low to this high, and that failure swing, this is the sister of the breaker, which is a mitigation block. Because we got a high, failure swing, break above the high after a stop run. Of course, if you move up in time frame, of course, this down movement, it's also an order block. It's just testament to the fact that PD arrays work inside of PD arrays. But from this weekly perspective, what I want your focus to be on with this example, we have the low, high, failure swing. So low, high, failure swing. And then we got aggressive repricing higher. So this upper part, that's a mitigation block. And we don't want to see the midpoint get traded through of that last up candle. And of course, like we just mentioned, this low being taken right there with price breaking through and price gets above it, that is a breaker as well. But it's all working inside of one another. But overall, if you're taking this low to that high, encapsulating the failure swing, that is a mitigation block. Right? How about this low, this high up here with that failure swing? Of course, it is an order block. You'll notice that PD arrays work inside of PD arrays all the time. But PD arrays they have very specific visuals on specific time frames. So you may have a mitigation block on this time frame, but then you drop down to the daily chart and you'll see that it's a bullish breaker. Okay? If you guys remember, we talked about so much stuff in here. When you look at this price delivery, I hope you guys remember all the things, all the different stuff that we talked about from this gap, how I had that available up there, how I had this inefficient. I mean, there's just so much stuff that we talked about this year in this area with DXY, and we were part of this entire move higher, right? Once it broke above the reclaimed fair value gap, we've had this on the chart for the whole entire year. There's just so much stuff, and I really hope, I hope all of you guys, well, if not all of you guys, most of you guys were able to get all that value in there, because what we talked about in there was just, I mean, it's unbelievable what we put out. It really is. It's because it's so effective. It shocks me how effective this stuff is, and I do it every day, and I've been doing it for 7 years. It never gets old. But I hope that you guys remember. I'll probably go over some of this stuff again at some point, because it's going to happen again. All the same stuff, just repetitive. But PD arrays work inside of PD arrays, right? So from this weekly chart, this here is a mitigation block. It's also a breaker. So when it breaks through this high, what should that become? It's a mitigation block, first of all. We got sell side delivered here, and we got buy side delivery. We offered sell side once more, and then we rallied up. So this is accumulation, back and forth, taking sell side, and now we took buy side. So again, all of that down to this low, all of that should be balanced, right? Or simply down to this low. If it's going to be bullish, it should be treated as such. If it stops treating it as such, it's telling you something. Price is potentially not going to respect that, and they're going to look to explore other options, and the buy side may be done, right? But I would take the middle of this range from this high to that low, I would take that out and measure it. So this whole upper part, so from this high down to that low, let's get exact equilibrium. So that whole upper range up there should not even be attempted. This is also, like I said earlier, and said back at this moment when this was happening, we created a balanced price range. Okay, you notice how this gap in here, how there was no liquidity. That's liquidity void when there's nothing available. So what did price do? Ended up going up there, spent a lot of time in that area, and then price rallied up. So because we didn't leave any liquidity voids behind, or any other gaps of any kind, and price displaced through it, again, this is a balanced price range. So from this high to that low, the upper 25% should be respected. This is also, in this area, I don't think I like how busy that is. See if I could fix that real quick. Okay. So that's a weekly wick. Okay. Again, I appreciate y'all hanging out. I know, it's a lot. We talk about a lot. But being broke forever, not realizing our goals are also a lot to deal with. So you got to pick your choice of a lot, okay? Because it's going to be a lot of work no matter what you do. And to be excellent at a particular thing, it takes mastery. Mastery is not just 1, 2, 3 steps, especially in something like this. That's literally made to not make you succeed. It's a zero-sum game. You're supposed to lose everything you have in less than 90 days. And that's generally the case for 90+% of people. So having the patience, the interest, the passion to be able to sit and listen to the actual details of something from someone that proves it every single day, okay, every week, aside from me, obviously ICT, right? If you're able to sit there and soak the information up, even when you think it's on board or, it's a lot of work, it's going to be for you, right? This is for those people that are willing to make that sacrifice. And I try to do my best to give you guys as much value as I can because I sincerely want you to win. I don't do the whole lifestyle dance when I very well could. It doesn't interest me. I don't care about image. I care about teaching you something, you learning it, applying it, and then telling me what you did with it, right? I want to just help and pass the blessing forward. That's literally it. Let me see. Of course, could that possibly be touch off the high on the weekly? Start the retest before cut in a few months. It may not even be a few months, brother. There's on the 29th. They're talking about the rate cut, right? They're either going to keep it the same, which is what I hope they do. But if they cut, I really don't give a shit what they do, to be so honest. For being honest here, they could do whatever they want. I just want to be able to know what that black swan is going to do, because that can really mess with things. It could really shake up the whole analysis, and we'll have to be ready to adjust. But if they keep it the same, things are just going to continue in the way that they have been. But if they change the rates, they cut it or they hike it, we have to be ready for that because there's very particular characteristics that come from those things. Just by fundamentally, right? What it does to the economy, what it does to stocks and the currency and whatnot. What's up, Choezi? It's good to see you, brother. But yeah, we'll see what happens. We've clearly started the retracement, and again, we have qualifiers to know whether this is going to be the retracement that uses this breaker to really break down, and then maybe set up a market maker sell model. Right? If we get below this low, that's how I will see this weekly chart. I will start to consider this low to that high as a market maker sell model. And then if that gets completed, again, this balanced price range is done, so we're really going to be bearish. We'll really pick up going down to the sell side delivery, and we may even get over here by the end of the year. I don't necessarily think that's realistic unless dramatic things happen. We'll see though. We're in a crazy economic, political environment, global environment. So we'll have to just wait and see. Lots of changes are happening. We got AI taking over. I mean, crypto legislation may pass. That's going to revolutionize and change the banking system. They already have all the pieces in place, so things are going to change. The banks are going to look different. The way that you interact with your bank is going to be different. The speed in which things occur is going to be different financially. So there's a lot of stuff. The Clarity Act, rate announcements. We got Iran war. I mean, there's just so much. Inflation that needs to be stopped. Inflation is rising. I think it's at like 4% right now. They don't want it to be that high. In order for them to manage inflation, they increase rates. So that's another justification that they may hike rates, is just because of these internal things that are happening fundamentally, aside from what we see on the chart. I'm very active when it comes to listening to all this political crap. I kind of have to be, because I'm not trying to be blindsided. And some of it's interesting, some of it's just like, oh my gosh, please make it stop. But it all affects us, and if you're a trader and you don't have at least an ear to the economic news that takes place and where things are headed, you're putting yourself at risk. You're missing a piece of the puzzle. Not that a news event comes out and that's what you're going to take a buy or sell on, but the overall, sentiment and what the manipulation does to make sense of manipulation, to make sense of certain price delivery. The news does play a role in that, or at least plays a role in terms of helping you time a particular thing you see in the technicals. Right, that's probably a better way to put it, because the news is all fake. They price things in before the news even comes out. So yeah, I hope all this stuff has made sense. I hope you guys have been getting value. I can somewhat look at this and identify this as accumulation. We got manipulation. If it continues to respect this wick level and this balanced price range that we just identified, then we will continue to see that price is going to try to get up here. We do have this PD array here. Many of you guys probably don't know, but this volume imbalance, whenever it's coupled with an order block at a turning point like this, if we do go lower, right, if it displaces once more and then returns back into this level, that's a PD array, a variation of an order block. It's called the indigo PD array. So that's a pattern, right, where there's a stop run into a PD array, where there's an order block. There's no real displacement through it. We like to see displacement through order blocks. It's a little iffy when it has a slow reaction like this, but a volume imbalance with an order block coupled together, especially after a stop run, right, if you have a reason to go lower, that in itself is a PD array. So you'd measure out from the low to the midpoint of the order block, and that would be a range. You notice that we also have a rejection block up here too. So if this does displace and we start to close below the wick level here that we have shown right there, we may have to consider this potentially failing. And if we break this low, we go from that low to that high, we're already at equilibrium. So the market maker sell model framework potentially is unfolding, but that's not till later, obviously. That's my contingency plan for bullishness. If this declines and breaks down and we invert this level here, which is it's a fair value gap with a volume imbalance, it's kind of unorthodox in there. I'd rather use the indigo PD array and the wick. You could take this high here up to that volume imbalance. That little range, if it breaks through it, it'll be sensitive as well. But we're going to have to really make a decision here if it's going to want to go higher. Okay, I would really like to see displacement. This candle here is closed. So if we can get the next weekly candle, maybe it wicks lower into the low here. Preferably if we're bullish, we don't want to see that. It's already got one tap a second tap into this balanced price range, into the breaker we talked about, which is also a mitigation block, almost perfect to that up candle's close. Still haven't even came close to the midpoint of that, but we got this area, we got the midpoint of the wick, we got an order block, the breaker idea, mitigation block, as well as the low. So you can understand that if this breaks through this low, it's probably best that you don't force bullishness, right? And if it is reluctant to give us that rally up, you know, you got to wait a little bit, right? Let it clear up. You know, we could very much have the possibility of consolidating because it's the end of July pretty much. We're on the almost on the 20th. So we'll have to keep that in mind as well. This is also, oh yeah, I already have that. I have that outline right there as well. From that high to that volume imbalance. So that's what that is right there. So we got the midpoint of that wick too on the monthly chart. So that's another PD array that's in that area, this large wick. Got the midpoint right there. You can see that outlined. Move that over. So gun to my head, you know, what would my potential anticipation be? Well, you know, we have broken through this low. If we're going to be bullish, what I just mentioned about the indigo PD array being here, if it's going to go lower, it will support that idea. When it breaks through, it should come back, respect it, not accelerate at all. I'm not expecting that unless we get that displacement. Then we can use it as an anchor for the idea. But we also, if you pay close attention and look right here, we have a volume imbalance, stop run with a bearish candle. So when this, if it can displace through that PD array right there, that's the indigo PD array going to the buy side. So it's the variation of the order block family that ICT has talked about. All right, it's a volume imbalance with an order block, which price ends up breaking through it, right, getting above it. When it comes back, it should be sensitive right there. So if we can get that to happen, that sets us up to seek the trend line liquidity. This looks very, very nice. Okay, so that's some pretty reasonable liquidity right there to look at if we do get this to continue to rally from here. Okay, and then we've got, here, let me actually move that over a little bit. It's that weekly wick midpoint, so I'm going to definitely heavily watch that. We have, remember what we talked about in terms of balanced price ranges, right? I'm going to continue to show you how this stuff is fractal and powerful because we looked at it on the quarterly perspective. We're taking that perspective and now we're moving lower in price. We identified this similar characteristics in terms of BPRs on the weekly chart. Now when you look at this price delivery, we have this high to that low with displacement. What is that? That in itself, if we move up in time frame, may be an order block, bullish, but it's also high, low, higher high, breaker, okay? But it's also, aside from that, a balanced price range. High, low, higher high. Sell side, buy side delivery. And we're respecting it up to this point. We haven't quite reached into it yet. But that area in there is another reason why this low that I highlighted from this weekly chart is significant, because if it breaks those levels, we have multiple things going for us to know that price has now changed. And look at this buy side to sell side. If we take that low out, that is accumulation on the buy side of the curve. So once price gets through that, if it was to do that, when it returns into it, this last down candle, we're at maximum the midpoint of this high to that low that encapsulates that whole accumulation, should be respected, right? We also have this, what is that? Whoops. That. From there. Not sure what that is. from there, where does this end? Yeah, I'm not sure. Not sure what I outlined right there. Yeah, I don't know. I think I'm gonna remove that. Actually, I should have labeled it. That's why you always gotta label your stuff, right? But yeah, we got this retracement. Go from that low to that high. If it breaks this low here, that's accumulation. We'd expect it to turn distribution. Once it does that, you would then qualify this accumulation down here as second stage distribution, and that would be a very easy shot to take coming down to these lows. Obviously, it's going to take a while. That's a contingency going against the bullishness. Gun to my head, I'm still going to try to see if we can't get price to come up here, especially if we can get the yields to continue with this SMT that we talked about, and then send price up to this wick, and then eventually up to here, and then maybe up to this monthly wick up there as well, which is right there. Okay, got order block here, respected. We got the wick model that I teach you guys in my private group showing up right here. And yeah, price seems like it's setting up nicely. What I would watch is this wick here too. If we can't get beyond that midpoint, we need it to close above that midpoint on this monthly chart. If this monthly chart cannot break that midpoint and we start to break lower and this becomes an indecision candle, it's a little bit less likely that it's bullish. So yeah. So yeah, with that being said, hopefully this makes sense, and we'll see what happens. I'm going to keep my eyes first and foremost here. Okay, we're going to watch and see how that gets respected or not. Because if price opens up, tries to attack the low but can't, and it stays above equilibrium here, so we're technically from the low down here. I didn't even notice I had this on the chart. From that low to that high, we actually have equilibrium right there, so we're at a discount. Okay, so that's beautiful. So price retraced to a discount. We got to keep in mind the risk of this being a bull flag, because if retail sees a lot of something, many times it's not going to work out. Sometimes they get offered the opportunity, but you know, it operates very unorthodox. And if they hike rates, they're in a good position, I feel like, and it aligns with ICT concepts. Retail concepts can work if they align on the back end with ICT stuff. Crazy statement, you know, believe it if you want, but when you backtest it, you see that this is the facts. So yeah. Oh, whoops! I didn't have the right chat option up. Couldn't see some of your guys' messages. That was weird. But yeah. So with that being said, that's all I got to say about the dollar. If you guys have any questions, you can let me know. But other than that, let's take this and move on now to the currencies. Okay, so we've had a lot of really nice price delivery in the currencies. Walk this like a dog too. Just gotta go back and look at some of the videos. Talked about this market maker sell model before it happened when we were all the way up here. Beautiful delivery all the way down. Market maker sell models continue to deliver within this bigger one for the euro, right? Breakdown there, classified that as a sell model. We had the failure swing. I said that's going to be low resistance when we can get down there. Beautifully delivered down there. Big market maker sell model, little market maker sell model, little market maker sell model. This low to that high. How about this low to that high? Isn't that the same exact characteristic that we looked at on the other chart in terms of BPRs? Very interesting, huh? So broke down balanced price range, lower 25 to 50%. Notice how I'm not saying that it has to tag that low and it needs to stop and then go. That's typical retail logic. Support turn resistance. This is the real way to view support or resistance turn to the other way. Okay, they're balanced price ranges, and they don't have to stop right on a dime right there. The lower 25 to 50%, we could come all the way back and still be valid, up to the 50% in terms of a BPR. Okay, Fritz, appreciate you hopping on, brother, as always. Be safe out there in South Africa, bro. I'll see you soon. But yeah, so we have that retracement here called market maker sell model. Everything's worked out essentially the way that we wanted it to. We do see that there's a clear Kraken correlation overall. So there's a decoupling happening between these two massively correlated assets. So that's showing that there's a lot of interest for the British pound to go higher. There's lots of manipulation when you see this type of Kraken correlation. And again, if the dollar keeps skyrocketing higher because they're going to hike rates, or even if they keep them the same, I think they're still going to try to move it up a little bit. If that continues to happen, then this may end up being pure manipulation. It's a very, very nasty range. You see why I don't trade currencies anymore? I just literally will not risk money on any of this. I'm not saying you shouldn't, but NASDAQ is just a better home, I feel like. And if you don't like how fast NASDAQ is, just go to the S&P. It's professional, right? It's a professional market. You can't have a 10-point stop in the euro or GBP anymore. You just can't, because the brokers can open the spread up and you can get tagged out. Versus being in the S&P or the NASDAQ, price can stop one tick to your stop loss, and you could still be, profitable. You could still have the trade active. It will respect it. They don't have the leeway to manipulate as much as they do in the currencies. So something to keep in mind, those of you that do trade currencies. But overall, right, we see that this is definitely taking a nosedive. We've got relative equal lows right there on the euro. That is fairly interesting. I mapped out this quarterly inefficiency. Okay, I mapped this out before it even got down there. Right, while we were up here, I said that may be a likely target. Why is that fair value gap significant? Why don't I use the whole entire fair value gap? Well, because again, sell side, buy side delivery, displacement. Up to this high right here, that's a balanced portion of the fair value gap. So if we're bullish, it's only going to have to come down to a place where it was less balanced near term. Okay, if it was to retrace at all, right? If it chose to respect this wick in here, then we would have just went off of that, and then it would have kept going higher, targeting the buy side. But because we got fractal highs that formed, because it respected this wick in here, right? Couldn't even notice how it tried to get up into the midpoint, but it couldn't. It only stayed below the lower 25%. You notice how the bodies of this candle and this candle, when they breached this with a wick, the bodies stayed below. That's an indication of retracement. There's another gem for you guys. When you're watching price run higher and it's creating a high or running into a fractal high, you got to watch the wicks and the bodies. If the bodies can't get outside of that range and it sets a fractal high, you may have to look for a retracement into a discount array like this. And again, this is a balanced price range. This is a high, low, higher, high. It's a bullish breaker. So, I mean, price could give one more little shot lower. Try to tag that. Right? But we wouldn't want to see this whole fair value gap get given up. If it gives up that whole fair value gap, then we're looking to go even lower. But that's a pretty far ways away. It's going to take the next probably another 3-4 quarters, another year basically, for this to get through that, unless you have a quarter that looks like this, which is pretty nuts. which could happen, right? So if you've been struggling lately as well, price is going to open up when you get outside of July. We're not really trying to worry about summer months. If you struggle in the summer months, it's best to just wait till seasonality kicks in to push us aggressively. You can literally time the times of the year where it delivers the best. And I keep you guys updated too. Uh, that's exactly why I closed on my short. Beautiful, Tony. Yeah, that's awesome, bro. That's the key right there. When you guys learn stuff from somebody and you're able to go into the chart and see it actively forming before the person that you're learning from talks about it, that's like, it's one of the most liberating feelings because it's like full internal confirmation that you are doing the right things because your eyes being trained to see the right stuff, right? It's like the way that snipers get trained. They get trained when they're, I don't know all the specific details. I watched a documentary though. When they're trying to teach them how to target in a complex environment, they teach them the signatures that show you something is there. So if it's like a straight line or a straight edge pattern inside of nature, a lot of stuff is not just straight, right? It's very jagged and whatnot. So if you just see like a square, perfect square, a lot of times it requires you to pay more attention to it. It's the same thing with how you're being taught here in price action. You're being taught to see the different characteristics that lead you to potentially identifying an idea or lead you to gaining clarity on where price is potentially going to go. Right? There's lots of correlation around military stuff and trading. So good job, Tony. Proud of you, bro. But yeah, so we'll see if it wants to hold on to this. If we can't hold this level, that's as far as I would like it to go. If we start getting even deeper, then again we gotta really think twice about things. Let me see. Hey, is the mic volume loud enough for you guys? It's kind of strange. Oh no. I don't know if how's the mic quality been? How's the mic quality been today? Has it been okay? Looks like it wasn't using my mic for whatever reason. Okay, appreciate you, Z. Yeah, that's strange. What the hell? That was very weird. It's better now? Damn, so it was not. What the hell? Like, bro, what is happening, yo? Instagram tried to play with me today. This stuff is trying to play with me. What a freaking mess. Appreciate y'all sticking with me, though. Hopefully it wasn't too bad. I'm assuming it was the headphone. Had to turn the damn, it was that bad? What a freaking mess. I'm so upset. Why? Why has today been this way to me? Instagram was talking about, oh, you can't post this or post that because of some nonsense. And now this? I should have double checked. Normally I double check everything. I just assumed. Hey, we'll tell your lady to come and learn too. Y'all need to be some ATMs together, yo. Y'all got an empire to build, okay? We ain't got no time for sleep. Okay? We'll sleep when we're dead, okay? Got too many things to talk about. Okay, good. Oh my gosh, what a freaking mess. Oh, she trades? Yeah, you got a winner, bro. You might as well marry her right now. You might as well. Let's put a ring on it right now. Say, you know what? I think it's time. That's a gem, bro. You better hold on to that. For sure. It's hard to find people that understand trading, especially like a spouse. Even if you've been with them for so long, it's just like, it's really hard because they just don't get it. They don't understand how much dedication, how like they got to chill, like don't cause stress to you or anything like that. Hey, it's a friendly feud, yo. It's all right. I don't know though, bro. After spending time here on this with this channel, with the things we talk about, she may be a convert pretty quick. So we'll see how it goes. Keep me updated, bro. Oh man. Tony said that's exactly what I told my daughter. Get like 12 hours of sleep. Yeah. Okay, that's a little. You still got to have some sleep. You got to be able to have clarity. I get like what 5-6 hours of sleep. Sometimes 7. Sometimes. But hey, I got a lot of stuff to do. I got a lot of people to help. I got things to do. I got stuff to do. We're probably not gonna have energy really when we get older either. So we might as well, exhaust the tank in a reasonable way. We don't got no time to waste, you guys. Time flies. Like I just turned 32 July 2nd, and I started trading 7 years ago. I didn't think that much time would go this quick. So it's kind of scary, right? But just every day, it makes you get motivated to wake up and make sure you do what you got to do. Take care of your health, take care of your family, make sure that your family knows you care about them. Give them the time. Trading's not important than your family. It really isn't. You gotta give them the time because you have a limited time with them. You could trade your whole life. If you have like parents or, older family members, people you care about, it's time's gonna fly. So schedule everything. You know what I mean? Oh, nice. 36. Started at 32. Now I'm making money. It's crazy. Yeah. It's a wild ride. It's freaking wild. It's nuts. But that's why having communities like this is great because you got to have people that actually you could relate to, you could talk to. In many cases, you can help one another and whatnot. We're all part of the same family in trading, whether you trade ICT or not. So we all got to be with each other, rocking for each other. All the drama and shit is just retarded. It's all for attention, and people got all these egos and stuff. We're all at war with whatever is on the other side of our trade. And the market doesn't want us to, the market makers, the ones that created all this, they don't want us to win. So why would we be against each other when we're all on the same mission? For attention, really? You can have attention being peaceful. Maybe you won't grow as fast, but, setting a better example, being more of an asset than a pest on social media. But hey, to each his own, I guess, right? But having your little tribe that you can confide in and bounce ideas off of, I think is priceless. Or just share ups and downs. You know what I mean? We all go through it. We all have losing streaks. We all have different wisdom that we can gather. Even if you have like a year experience, our experience is all different. So that 1 year someone may have, they may have overcome and experienced something that you may not have. So we all have value, no matter how much time we've spent. So I've been saying this to everyone. You're the only second person I've heard say this. We should be again. Exactly, bro. People just love to cause chaos and get attention, though. I think it's a big attention-seeking type of situation. And I mean, I guess, right? Like, if that's what they want to do, you notice that a lot of the people that are like the most controversial, aside from ICT, right? Because he's in the minority of people that are controversial that do have the skill set. But most of the people that are the most controversial, they don't really know how to trade. They don't prove shit. They don't come out here and do what we do every week, every day. Like they don't show anything that proves that they're actually what they say they are. They can't call the market continuously. They don't have any profitable students. They maybe have hit and miss, right? People that get lucky one day and then don't have the discipline to sustain and blow it all. You know what I mean? So most of the people that are the most controversial are generally the worst traders. They focus too much on attention. And again, there's a handful of them that are controversial that are really good, and they just do it for attention and whatnot. But yeah, that's how they make. Yeah, exactly. Like I have a code too. Don't get me wrong. with Tradeify, but that's only because I believe in Tradeify. And I say all the time, you know, whether you use it or not, doesn't matter. But I believe in Tradeify only. Out of all the prop firms, whether you use my code or not, because they've treated me very, very well. I haven't had any issues, not one problem. All the others I've had problems with. So, but yeah, that's how most of these people make their money, through codes or, you know, selling a mentorship that is BS. We have an apprenticeship where you get to sit with me and I walk price action every day live, like no days off, every day. So you can tell really quickly if I know what I'm talking about or not. So Zia, I haven't necessarily messed with Lucid. I do say Lucid's pretty good because I've had a lot of friends who also use them. They're the way I view it is Lucid is basically a sister to Tradeify. They have very similar rules. I think some of the people that work for Lucid also used to work at Tradeify. So they kind of brought the same ideas, same ideology, same rule set, same business structure. And the CEOs for both Tradeify and Lucid, they're very responsible with their money. That's key. You got to get to know who the people are that run things in these companies, because that's going to determine whether they're going to be here for a long time or not. If they're reckless, like what was that one company called? I forgot. It had like a kingdom type of vibe. Do any of you guys remember? I forgot what the hell the name was called, but they went under because their CEO was just buying a bunch of houses and trying to be a social media influencer, getting addicted to being famous, and he went bankrupt because you can only waste all your money for so long. You know, I forgot what the hell the name, they had like a kingdom type of vibe. I totally forgot what the name was of the firm, but he went under, right? And there's many stories like this. That's why you got to make sure you find prop firms that are reputable, whose CEO are very, very into, you know, managing their business properly, and they're for the traders, the funded trader. Yeah, that's exactly it. Yep, that's it, Tony. That's it right there. The funded trader. They had this the CEO who was just like trying to be an influencer. You're just looking for how they're managing the business. You can use ChatGPT to do this type of research. I mean, I do it for stocks too that I invest in. If the CEO is a piece of shit, you know, I don't care how good the company is. I'm not gonna even mess with it, because the CEO makes business decisions, and long term, if they're going to be successful, the CEO has to be good. He has to know what he's talking about, be responsible with the cash. That's the same thing with the prop firms. Most of these prop firms go under because they do some scandalous stuff, or they're reckless with their spending, and they don't. That's why Apex is still around. The owner's really good. That's why the funded trader went under. That's why. What was the other one too that went under? I forgot what the hell. Yeah, I mean, you could tell that I don't even look at too many prop firms. I just find one, do research on one or a couple, decide out of those which ones I think are the best long term. You also got to look at the rules too and the plans they have, because there's a lot of prop firms that cater to the gambler, and there's some that cater to the long term trader who's trying to be profitable without gambling. And Tradeify has that type of they have that type of plan, right? It's the lightning accounts. You have a 20% consistency rate that you have to maintain, but that is literally a rule that makes it so you are not going to overtrade. And if you're consistent, who gives a shit about the 20% rule? Who cares? Go in there, you know, make like $500 to $1,000 every trade, and you're good. Stack it up over months, and if you're consistent, that's enough. You know, like, it's enough. If that's not enough, then what the hell are we doing? Are we here to make money? Right? Or are we here to do some ego type, you know, social media influencer type of stuff? There's nothing wrong with doing either one, right? If you want to be an influencer, be an influencer. But, you know, if you're trying to be a trader, you want to focus on the long term. You know, you don't want to be like these crazy gamblers. And if you want to get the maximum out of having this same perspective, then just go with somewhere that allows you to have multiple accounts, like Apex. You know, they allow you to have 20 accounts. You don't really need that much. It's kind of overkill. You got to get used to that as well. You can't just buy 20 accounts and then all of a sudden there's going to be the same emotions. The numbers look bigger. If you lose $200 on a trade, multiply by 20 accounts, the dashboard starts to look kind of crazy because it accumulates everything. So you got to just be just got to be a little bit aware of these things psychologically. It's all the same, but you got to slowly work it out. And if you can't manage one account, you can't manage 5 or 20. You know, so manage that one. If you can get one for 6 months, you know, see how it goes, see how good you're able to follow your rules. Stack a buffer. Don't withdraw right away. That's the biggest mistake, is trying to withdraw right away. If you can get eligible to withdraw, that's great. Build a 3x buffer before you even consider taking a withdrawal. And that first withdrawal, if you're looking to stack accounts, stack accounts slowly from the profits you make from the one account or 2 accounts that you have, right? And if you're already profitable, this ain't financial advice, but what I did, I just went straight to Tradeify. I was like, all right, I'm kind of sick of Top Step. So let me, and there was a lot of controversy. The CEOs, like I said, the CEOs are doing some wild stuff. They're starting to sell off some of the equity in the company. I'm like, why would you do that? Why are you going to do that? Why are you selling off the company? Is there something wrong? Because if it's profitable, why are you going to sell it off? But they're exiting, and we don't know who these other people are. So that's a little tricky, a little scary. So once I found that out, I was like, you know what? Let me get away from some of those talks just in case. I don't solely depend on funded accounts. I have, my personal account I've grown for years. I really don't need any prop firms at this point, which I'm grateful for. But it's because of prop firms that I was able to get the capital. Just trade consistently, put money into an account until it's large enough to make a solid impact on your life by risking very low. And then you grow from there. And then prop firms are secondary. That's always been my plan. And I think it should be yours as well, long term, in terms of structuring your trading business, leveraging prop firms. Because a prop firm can go out of business. They could sell the company. A shitty CEO could come in, which is what I was fearful of about Top Step, because of the back end stuff I was hearing. And so I went to Tradeify. And again, if you guys do want to use the code that we have, again, whether you use it or not, doesn't matter to me. But if you guys do use Tradeify and want the best discounts, if they're not showing them, you can maybe double check with the code WMG. But again, if you don't use it, fine. Doesn't matter. But I noticed that sometimes they give different deals for different traders, or just like affiliate versus what they show publicly. When I saw that, I was like, oh, I might as well get something for my community. You just never know. But yeah, so that's there. Again, I'm not pushing you to use it. If you don't like it, don't use it. But if you do have no real issue with that, and you do want to double check or get discounts and support the channel and what I do, you can also go ahead and use that code. But the biggest thing you guys can do is keep showing up to these calls. Watch this stuff, improve your life. That's what my goal is, right? At some point, I won't be on social media. I'll just be, trading with my private group at some point, because social media is a cesspool of BS. But until I feel I've made a big enough impact, I'm gonna be here. So I'm not gonna stop anytime soon. So it's nothing to be worried about. Eventually, though, hopefully I could buy an island and we could all just go live there and build a whole house off the grid, like a whole city, and then just trade and become billionaires, right? Get away from crazy stuff. Can you talk about your 101 and private group? Sure. So I do have a link in the description that'll bring you to all the details about that. But in a nutshell, I'm just basically going live every single day, allowing traders to sit there and watch and ask questions as I navigate price, engage with them, talk about all the different conditions, talk about, in detail, like similar stuff that we talk about here. But I'm doing it, taking things in such a deeper level every time about every concept. And I'm just like pouring out everything I know rather than just a forecast and stuff like that. So it's an immersive, handheld approach where you're with me going live every day, proving that what we do works. Here on YouTube, it's obviously 2 days a week. And the one-on-one aspect, we pretty much work one-on-one, right? I can only accept 20-ish people. I have 21 people right now. But the people that get the first, that are first in line are obviously people that are part of my private group who want the one-on-one experience. But I can only do 20 per quarter because I'm literally on one-on-ones every single day. Like today, I have 3 one-on-ones. I had 3 yesterday. They go for 3 hours long. So, I mean, it's a lot. So I just can't do more. And it's kind of a custom approach. I meet you where you're at. You tell me all your strengths and weaknesses. We develop a study plan and kind of where I want to push you towards. Try to fill in any gaps. If you've been trading ICT for a long time, like we said earlier, there's a lot of people that don't know what the hell they're talking about. They really don't even know the half of it, but they say buzzwords and they sound like they know, but they don't. And let alone they don't even prove anything. They don't come out and put their neck on the line to really show that they're worth listening to. They just say pre-recorded lessons with no evidence. At a minimum, you got to at least show when you're coming onto the market that you know what you're talking about. And when you call something, it works out more often than it doesn't, right? At a minimum. But most people can't even do that. They're not even doing that. And we're going live every day showing the different trades, calling multiple trades a session every day. And they all don't work, right? We're not perfect, but we are very, very accurate, and it shows every single day, every day. And if I'm lying, anyone that's in my private group, come out and say I'm a liar, because I know some of you are on this call right now. But a lot of you guys have been with me on YouTube by itself, and just that experience shows you like there's something here. There's something about what it is that we do that is not like everyone else. But in a nutshell, that's kind of what it is. My private group. And again, it's not for everyone. If you're not serious, if this is just a hobby, I mean, I don't encourage you to join that either resource, because it's a community full of serious traders that just want to be around traders that are, of course, on the same mission. That want to be constantly immersed in the proper way of doing things, who see something that actually works, that's not overly complex, that's very organized, and just be around that environment so you can just improve. You have no choice but to improve when you're around that type of environment. And again, I'm the first one to say I'm not perfect. I make mistakes. I have my own difficulties. I'm very transparent about it. But I'm doing this for 7 years, full time for almost 5. So, I mean, it's kind of a testament to itself. And I have many students that have done very well. If you guys want to follow one of those students, you can go follow Harley Trades on YouTube. He's one of my students, not so much a student anymore, because he's on his way to, not on his way, he's already walking on his own, able to make thousands of dollars a week, let alone per month. And he's only been trading for not even 4 years. He came to me with 3 months experience, and, he ventured off, did his own studies and whatnot, but his core foundations, we were able to get him on the right path. And it's amazing to see that type of story. And I don't think he's ever going to need a job. I'll have to ask him about it, or maybe you can ask him about it. If you guys go follow him, he'll tell you all about it. But there's many like him. He's definitely the most breakout trader. Some take longer, some it happens quicker, but that's just the nature of trading. No one is the same. No one thinks the same. No one comes from the same background. No one has the same level of discipline or respect to risk. No one has the same risk appetite. So that's going to determine how much you're going to be able to make, and whether you could be consistent or not. Is if you solidify any of those other issues that may be dragging you along. Your ability to be coachable, your ability to admit when you're wrong, your ability to make changes, have self-control. All these are variables that stand in the way of a typical one size fits all type of outlook for students who come and learn about trading. It's just an unattainable task to get everybody into the same thing. And luckily, I'm versatile. I have 6 different models. I've been, again, doing this for years. So, I mean, I can meet students where they're at. And I've worked with over 200 students, 200 plus students at this point. So I have a lot of different things that I've learned over the years from not only my own experiences and hardships and overcoming difficulty, but also being able to help other traders overcome. That's why a lot of the stuff that I share with you, you can immediately see a change or immediately start to see clarity start to manifest, because I know over the years what really pushes traders across that line. What can really get traders to see the markets properly. That doesn't take away from the basics and fundamentals that have to be understood. That doesn't take away from the fact that you are going to have to watch some ICT videos, because, I mean, there's no reason for you not to. He has 30 years experience. Some of the stuff, obviously, he teaches is dragged on through rants and whatever, talking shit and, doing his marketing stuff, right, to get attention. But, that's something I've heard why people like to come here, because I tell you applicable stuff and you're able to apply it minus the rants. We have conversations obviously about other things related to trading as well. We discuss many things, like some of your guys' struggles and whatnot, but I wouldn't classify that as a rant. Or if I tell you like some of my experiences with something or how I've been able to discover something and what got me to that discovery, I wouldn't classify that as a rant. That's just like a story. It's explanation of how I got to where my mind is and why I think about certain stuff in the way that I think about them. I was looking into funded futures. I think they're more on the expensive side. They are a good company. Their CEO is absolutely amazing. So they're a good company, but it just depends on your budget. Are you able to spend a premium price, right? Are you able to get that back? Is that investment going to be worth the investment, right? If you're just like trying to get a funded account and you haven't had one yet, it's best to try to go with like a cheaper option. And I think Tradeify is a cheaper option. I think Lucid is a cheaper option. Those are go-tos for sure. I would say Top Step if they weren't having the back end confusion that I've discovered. But I don't know. I'm with Top Step still and Tradeify. I have a couple friends that are with Top Step, never had any problems. So I don't know. It's just a risk that me personally, I had to diversify a little bit. Funded Next, they're great too. They tried to partner with me. Like they personally reached out to me the other day, and I don't even have an account with them, but I've talked about them a couple times. So I'm not sure. I'm not sure how they came to reach out to me. I had Ninja Trader reach out to me the other day as well, talking about how they want me to come and teach or something. I'm like, I'm not trying to use Ninja Trader. So it's the first time I've started to get people reaching out to me. I don't have a big account, but I'm having people reach out to me. It's like, I thought you had to have giant accounts, but if you have something that works and you're out here proving it and you catch the eye of somebody, you're going to turn some heads. And mind you, look what I do. Do I show a Lambo? Do I sit here showing like, hey, look at my $10,000 day, you guys? I very easily could. I've done it in the past. I do it, sometimes here and there, but I don't lead with that. And people still, when they stick around or just watch the content, they see what's here. And it just works, and whether you come here, take what you need and leave and don't hang out, or if you come and decide to be a long-term, member of this family, either way, I just want it to benefit you. I just want to help you. I want to pass the blessing that I've been given along. And, you know, it's my main goal on social media. So whichever route you choose to take, you know, so be it. But I hope that when you leave these calls, anytime that you spend here with us, I just hope that we're able to push you forward a little bit, be like a conduit that gets you a little bit closer to your goals. You know, that's the main philosophy here. Silence says you're great. I appreciate you saying that. Appreciate the kind words, brother. What about NQ for my vision? Oh yeah. Yeah, sorry, we kind of got in a big conversation about a couple of other things. But yeah, we'll actually get back to the chart. It's a good reminder. Holy crap, it's almost been 3 hours. Yo, my bad, guys. My bad. I probably should have waited till we finished the analysis to start talking about other stuff. But appreciate y'all patience. But yeah, so we'll see what happens with this. We'll see what happens with this relative to the other assets too. If dollar does hold this and goes higher, then we'll see the impact on this going lower. We need the euro to break through this order block, preferably break through this high in order for us to be bullish. This is pretty telling in here, so we'll see if that wants to hold this level. We do have, what level can we use? So weekly, let's see on the monthly. So we got this. Oh, remember the PD array we talked about earlier? Volume imbalance with an order block. I don't like that this is not the lowest of these, but we could still use that midpoint to help us justify if price is going to continue to start going lower. See, I had this, excuse me, I had this mapped out the other day. Invalidation for shorts if it was to get up above that high. So I think we're going to stick to that. I think we're going to stick to that assumption. We have a decoupled market, right? So it's a little bit sketch. So you guys just keep that in mind as we walk forward. Okay. So we'll keep an eye on the GBP, because if the euro ends up breaking above this, the euro is just being sick. If this is going to go higher, though, in order for us to trust it, it's going to have to see lower dollar. That means that we got to see lower yields and then higher bonds. So the bonds have to rally if that's going to be what we're going to see. And if they don't, then we have a decoupled market. What does that tell you? You got to lower your risk. All right. So that's all that would do. And you just go off of what the chart's showing you and correlated assets. But yeah, so gun to my head, I want to see if this order block can hold and keep going lower. But it's 50-50 right now because of the decoupled effect. So we're going to have to just wait for more information on the currencies. But we'll see what happens with this. See if it can respect this down candle here with the order block. If this ends up above this, then we know that we're going to be bullish. And then we'll try to look for this wick, these relative equal highs up here, and this high right there. So yeah, so that's kind of my opinion on currencies. End of the day, I think we should just settle with needing more information. But the euro, we'll have to see how it treats this low. And then we'll make a decision after that, right? After we see what happens. If this breaks down below this, again, that'll be a deeper market maker sell model, potentially. Right, we're in a range. So yeah, that's my opinion on that asset. So if we scrub over here to the NASDAQ in particular, let's move this to the monthly chart. Just do a quick analysis. I'll get you guys out of here quick. I know you guys have been here for a while. Again, thank you for spending time and being patient and going back and forth with me. I appreciate y'all hanging out. Again, hopefully y'all have been getting value. If you have been getting value, don't forget to like the video. Definitely helps the channel reach more people just like you. And we got to reach more people like you so we could help make this industry a better place. You know what I mean? So yeah, let me see. I spend all my day on a chart. Then I want to take a break looking into YouTube. Then I find your live. I was really happy. Having company. Oh man, that's awesome. I really appreciate you saying that, bro. I'm glad you're here. I'm very glad you're here. I'm gonna get you to the point, if you do spend time here, where you're gonna feel like you don't need to spend all day on the chart. You know, you'll feel like you get on, have a good opinion of what you think price is gonna do, and you just get up and go live your life. You're not gonna be concerned about it because you have certainty about the clarity you see in price. You can't obviously be certain about profits because that depends on trade management and a laundry list of other personal things. But when it comes to process, you're definitely in the right place to gain clarity, to, you know, and be around a community, right, that understands and is very positive. You know, it's definitely the right place. So I appreciate the kind words, bro. Happy you're here. All right. So again, when looking at the NASDAQ here, if you go back to the other video that we did when we were talking about this chart and where this candle was currently as it was printing lower, we failed to break up to this high, and we were digging into this wick in here. If you guys remember on the last call, I did talk about if this gets below this wick here, it's probably going to look to target this. And I have a pretty high level of certainty if it was to get down through that, I really showed no respect to it that we were going to get down to here. So the full monthly fair value gap that we have targeted at this point worked out under the context of what we described before it even considered going down there. We did talk about the consolidation that we were stuck inside of. One thing I did mention as well was this high to that low. I talked about that equilibrium and how that was going to be affecting price. I said that when price was going to decide to leave that consolidation, that equilibrium point, I mentioned that that equilibrium point is going to be the anchor when it does decide to break out of that range. And you see how I was correct on that. One thing to consider in this, we had an order block here, we had a suspension block in here, and we were consolidated at equilibrium from the parent range. You may be asking, why did you pick this high and that low? Well, because this high and that low is the extreme. All of this price delivery is inside of that high and that low. So that's the parent range. That is the bigger equilibrium the price is going off of versus something that's intraday or short term like this one. You know, there's nothing wrong going with this high to that low. It still respects the equilibrium, but this high and that low is special because all of this is encapsulated inside of that range. So that equilibrium, as you could see, as I was talking about and mentioning, if price is going to break out from the live calls this week, I literally talked about this. If price is going to break out of that range, it's going to start. We're going to notice the start at that equilibrium, right? It's going to push away from that equilibrium, whether it goes lower and targets the low or if it goes higher to target these highs. The origin is going to be at that equilibrium. It's not going to start from up here, right? It's not going to start from down here. It's going to start from there. And look at how beautifully perfect that was. It really started from that. And look at the closure on this candle. We closed right at it. That's not a random phenomenon. Why didn't all the other ones close right at it? Isn't that interesting? The leg that decided to leave literally closed or opened right at it and then couldn't even get back above it and then accelerated from it using CPI as the news event and PPI. So we needed a news event to get out of that range. So a news event plus the equilibrium ended up being the catalyst to get us out of this. Okay. And so now we're reaching down into this level. So because we took a significant sell side liquidity pool, which is this weekly low, it's also the June low. So that's a previous month's low. Because we took that low, it is totally understandable that they were going to pull back and get price to give us a TGIF. I wasn't live on Friday on YouTube, but I was live with my private group. And if you are in my private group, let everyone know that we caught this TGIF and mapped it out, both buys and sells, and the condition that would have arisen as a result of us taking this, right? We literally mapped this whole thing out perfectly, as we did pretty much all week, right? We did pretty amazing things all week, calling multiple setups, even when price was inside of this, weird range. anticipating this to take place. Dollar was rallying as well at the same time. You heard the analysis we talked about on the dollar. We did an analysis before any of that stuff took place, and it continued. And as a result, we see that this also continued as well, and then targeted our main target, our full target. Before price ended up getting down here, though, we were focused on this low, seeing if price could close below that. If it did, we classified that as a change in state of delivery. And then we looked at this low. We looked at the wick levels here, used those as references for both targets and continuation support. And then price ended up targeting the low down here, the failure swing. We also have this low and that low as a failure swing. So you could see that it took those out in low resistance fashion. One thing I want to show you is the fact that we took stops here when price dropped down. Price rallied up aggressively. And you notice how it was high resistance to try to get us down below this low. This is what ICT calls deferred liquidity. Okay? It's deferring the run lower because it's trading into high resistance. Why is it high resistance? Because it has a liquidity pool that was swept before it rallied away and came back. So that's a stop run. So when it triggers in the delivery to a high resistance level that we're going to break through like this, it's going to defer the liquidity. And what is it doing in this case? It's transitioning this liquidity pool down here from high resistance, because it's a stop run, to a failure swing, which is low resistance. And then once it completed that, along with some of the other contexts we talked about that led to this going lower, but once it fulfilled this and we were ready to go, price broke through it in low resistance fashion. So this is a concept called deferred liquidity, and it's present when price is trading into a high resistance liquidity pool. What is high resistance? If you want to keep it as simple as possible, you can make it more complicated, but if you want to keep it as simple as possible, ICT classifies high resistance and low resistance by stop runs being high resistance, right? So, low sweeps and then runs away from it. If it comes back down into it, it's going to be high resistance, or it's just not going to go into it. Low resistance is a failure swing. If we're trading into that, it should be very easy to get through that and shouldn't fight it as that much. Or if we're trading into consolidation, that's also high resistance as well. Okay, relative equal highs and lows, those are low resistance. Okay, so equal highs and lows, low resistance. Failure swings, low resistance. High resistance is like this. High resistance is also trading into an opposing PD array. Like if we're bearish and we're trading into a bullish PD array, you may be met with high resistance. And then, of course, like I said, trading into consolidations, that's high resistance as well. Okay, anytime price is trading against a trend, so if we're bullish and it's trading lower, you can anticipate high resistance liquidity run signatures because we're trading against the trend. We're swimming against the tide, right? If you're going with the trend, you have a more likely chance of catching low resistance, especially if we're bullish and we have failure swings happening or setting equal highs, and it still supports that price is going to, in this case, go higher, right? If we were bullish. And the same thing is true when we're going lower. You just flip it for bearishness, okay? So in a nutshell, that's really all you need to know. I didn't even go this far when I described high resistance and low resistance before, but you don't even have to go any further than that. That's all you would ever need to know about high resistance and low resistance, and what visually it looks like or what you should expect around certain characteristics in price. Okay, so if you didn't write that down, you really should. And then go back test it, because you're going to be pretty surprised at what you see around these levels that are both classified as high resistance or low resistance relative to the list. Okay, respect to my own mistakes. Yes, attracted to much. Watching your live, I found myself in the right place. Yeah, I'm grateful that you think that, brother. Again, we're happy to have you. For sure. Yeah, if you follow me on Instagram, I'd be really interested in any of you guys that are joining us maybe for the first time, or we haven't had a personal conversation. I do encourage you to send me a DM and just kind of tell me about your experiences. Tell me about you as the trader, how long have you been trading? What do you trade? Have you ever traded any other types of content or concepts? Have you struggled? What are your struggles? What are your strengths? Or if you have any particular questions, I'd be happy to hear those and go back and forth with you as well. So if you just type in WMG trading, just straight up just that, with no special characters, you'll be able to find it. It should pop up. I have like 6,000 subscribers or something like that, or followers. It better not be something where they're blocking my handle from being searched. I've been having issues with Instagram this morning. They tried to send me this warning about something. I'm like, dude, I literally just post motivational, educational content. I never even show money. They gave me a warning before, which is another reason why I don't really show like profits or anything like that too aggressively. I only do it every so often because I've been threatened before by stupid Instagram and YouTube as well. And they say, oh, it's this and that. You can't be, given trading advice, or you're going against our terms of service, or blah, blah, blah. It's just like, I'm literally not even doing anything close to any of that on purpose. So what am I doing? So yeah, if any of you guys could search it up and try to see if you could find my name. It's, again, just WMG Trading. If you find any people that have any other handle that have my content, please let me know. It's the only way I'm able to get to those people and get them banned. I've had to do 3 this week. 2 on Instagram, 1 on Discord. So and it's because of you guys helping me. I can't find them on my own because they don't reach out to me. Of course, they're not going to reach out to me and try to play the stupid crypto game, but they will try to reach out to my followers. And I don't want you guys to be hurt by stupid asses trying to take my skill set and brand and leverage it to do BS. So yeah. Happy to talk about something like that. Yeah. So yeah, just if you can find me, just hit me up. If you're not part of my free Discord, you can go join that as well. The link's in the description for that. And again, any details for any of you guys that would like to work with me one-on-one or be part of my private group, you could scan the QR code and or get the links in the description. Or you can just hang out with us here, right? You're still part of the family. You still get value. You know what I mean? Whichever direction you decide to take it. I'm appreciative for all of it. And I think you'll get value from all of it, right? So again, when it comes to the NASDAQ, I'll let y'all get out of here. Sorry, I think I've kept enough of your time, but time flies when you're having fun, right? Kind of just is what it is. But all the stuff that we talked about in the previous calls, right? It manifested and we got down below our target that we had identified in the crosshairs for a couple weeks now. Lots of failures to go higher, so clearly it was weak. Plus Iran war. I mean, we have lots of catalysts that send this lower. Plus we had AI issues. They're draining their free cash reserves. Almost every AI company, especially Oracle, they're damn near like they're in dire straits right now when it comes to their free cash flow. But they make a lot of money, so they shouldn't be too concerned. But they're in massive debt, all these companies, because they're trying to expand rapidly. But it's kind of like it's kind of hitting their bottom line, and it's going to affect their stock prices. And because we have so much tech in the stock market, they're not the only thing, right? But there's such a huge percentage in the stock market of tech that if something happens to them, if they catch a cold, the whole market might, start throwing up, okay, or take you for somewhat of a ride to correct until they get back online. But kind of just is what it is, you know what I mean? Just looking forward to break down the chart and stuff. Just read also that they're going to inject a lot of money. Yeah, they're definitely. Something else is happening in Japan too. I'll let you guys go do some research on the Japan carry trade or reverse carry trade. where Japan had basically zero interest rates to borrow Japanese yen, which people then went and took that Japanese yen and transitioned it to the dollars of their, wherever they were spending money or investing. So they take a ton of money from Japan at zero interest rates for decades, take that money and then go and invest it. And then basically that rooster's coming home to roost, okay? Because now they have to save their currency. They got to increase the interest rate in Japan. So all that money they're now going to start knocking for the fee because the interest rate has now spiked. And these people that are in debt, that over leverage themselves because of zero interest rates, that's going to suck money out of markets. It's going to make people go nuts. It's going to have a heavy impact on the global markets because every economy has borrowed money from Japan because it had zero interest rates, like free money to innovate and do all this stuff. So now Japan, to save their currency, is going to have to increase their interest rate. They're trying to figure out how to do this without totally damaging the whole entire world, but they're kind of having their back against the wall. So some dramatic stuff is going to happen, and that's bearish for the market because that means that if they owe money, anyone that's invested in the stock market heavily, for an example, if they owe a ton of money now because the interest environment has changed, to now pay the debt, the interest rate on the debt that they've accumulated, which is not like $100. Like these are hundreds of billions of dollars that's been borrowed. So that, interest rate even moving up by 2 or 3 or 5 or 7%, I mean, that's going to be brutal if they're going to be demanding payment on that so they don't default. So what are they going to do to deal with the debt? They're going to have to liquidate to pay off the debt. So that's going to suck money from markets from all over the world, not just the US. This is a global phenomenon, and it's going to have an issue. It's going to create an issue. So that's something that I'm watching very, very closely. But you guys can watch it closely too now. It's called the Japan carry trade or reverse carry trade. And it's, again, the gist of it, to make it simple, is they offered interest rates to borrow yen at like zero interest rates for so long. That was very attractive for big business and people that want to just, expand and get investments and whatnot. Take the yen, make it to dollars or, to dollars or whatever currency from whatever country. If you live in India or, wherever, right? Everybody has their hands in this pot. So, now if the interest rates rise, the debt's going to be owed, and it's going to be a lot more than they expected. So to pay for that debt, they got to liquidate. And unless they find a way to make it so they don't have to liquidate, this is like a train that's headed towards the global markets. It's got a bomb on it. Okay. And something may happen. It's going to cause some damage. So we'll see how bad that's going to be. But that's just another catalyst as far as why this has dropped. We got war, AI, Japan. I mean, it's just so much fundamental stuff. And if you can align fundamentals with the technicals, the way we do things, you can start to make sense of a lot of stuff, So yeah, this is all the stuff that's happening, right? And the dollar, they're talking about hiking rates for the dollar, hiking rates for the Japanese yen. All of this is to manage inflation, right? And then to save currencies. This is part of how they do it. They increase the rates, which brings money back to their economies because the rate is higher. So if you invest in that company, the rate that you get for investing, not the company, the country in their bonds, the rate goes up. The investment, return on investment goes up. So that pulls money to the economy that raises the rates. It makes it harder for you who's in the country to borrow money, to buy homes, to have debt on your credit cards because all the rates go up. But it's good to save and to save an economy or save a currency and help with managing inflation. But this is all the stuff that's happening on the back end right now. Most traders don't know any of this stuff. But you guys, because you're part of this community, you get insights like this here and there whenever I feel the need to talk about stuff a little bit deeper. But again, you got to match the technicals with fundamentals. You can't just be solely fundamental. The fundamentals can change in one Trump tweet. Okay. So you got to kind of be cautious, right? It just is what it is, though. Okay, so keep a lookout for that type of information. I will continuously update you as well. Yeah, I don't like that, honestly, about the whole Trump tweet thing. Basically, the government is giving a signal service for the world for $100,000 per subscription. It's literally like a signal service, which is nuts. It's never been done before. But hey, it is what it is. This is rich people problems. You know, we'll just stay in our lane, I guess. But yeah. So again, keep all this stuff in mind. But with price going lower, we have purged this low, hit a significant PD array. Now we're coming off that low. We're going to have to see if this is going to continue to go lower and be trustworthy. I would love to see this continue to offer price closing below this low. I don't like that we've closed this candle above this low. That's not necessarily the most convincing sign, especially because this low is being purged inside of that fair value gap. So again, it's going to be very dependent on what the dollar does. If the dollar decides to tank, right? If we start to collapse and, fail to do some of the buy side interests that we talked about earlier, say the yields end up dropping and the bonds end up rallying, that'll be something that recovers this to then make this go higher again. I would like to see, before I start to think bullishness is back in line, I got to see the midpoint of this wick getting traded through and closed. I'd like to see this fair value gap get inverted, and I'd like to see us close above the midpoint of this order block. That's 3 PD arrays to the upside that would fully confirm that price is bullish. Obviously, on our way to that point, we'll be able to navigate price intraday. But overall, from this bird's eye view, that is what I would like to see to fully commit to the fact that, okay, price is going to keep going higher and we're probably done going lower. Otherwise, if this opens up, rallies into this wick, and then we get like an order block that price trades through, creating a bearish continuation, then again, we'll just continue to seek sell side liquidity, maybe even the rest of this, the rest of that fair value gap. Let me go see. So yeah, we have basically up to this point, right? All of that is pretty much inefficient to the sell side. So we could very well go down through that. That would be promoted by this stuff being respected. And notice, I'm only going to be able to be bullish if we get above this level. Otherwise, all of this may get treated as a BPR, especially if this candle ends up closing this month as a complete overlap of this wick. Because again, that'll be a wick followed by displacement. That would be enough of a catalyst for me technically to be able to look and see if we could target all the way down to here potentially, or at least up to this point, right? To get into that upper part of that fair value gap. But again, this is all inefficient to the sell side. So them offering sell side in there would make sense. Now, price getting down into here, not so much. You already have a lot of buy side and sell side offered in there. So it doesn't have to go down there. So the more recent, more near-term likelihood is that price could look to reach as far as this level. But if, the dollar starts to rise and we see interest rates continue to rise and the bonds tank aggressively and the currencies, maybe we see those drop aggressively. We get the whole Japan thing that unravels. If we get all that stuff taking place, then we'll end up seeing this thing potentially take a pretty hard decline. None of us really know how bad this Japan situation is going to be for the whole entire global economy. So it's something that I'm definitely a bit concerned about, just because I got like long-term investments, right? So it's, little sketch I have definitely de-risked a lot. Right ahead of this huge decline in AI, I shifted a lot to my more dividend income based portion of my long-term portfolio, and I'm grateful I did, because it would have eaten up a lot of profits, and there's just so much going on long term. It's a bit hard, right? But if you believe the U.S. is going to be here and you're a long-term like retirement fund investor, everything shouldn't be you shouldn't be fearful about anything. First of all, everything is just going to be at a discount. I believe the U.S. is going to be here. I believe the U.S. is going to be a leader in AI. I believe that things are just going to keep getting better with AI. And I think the economy is going to explode once crypto and all this AI stuff starts to mellow out and we get more regulations, reasonable regulations. I think that we're just going to have so much upside. We're at the beginning of a revolution, the AI revolution, crypto revolution. And I think that things are just going to it's going to be bumpy, right? We're going to have a pretty bumpy ride. But I think overall, long-term, things are going to be good. But that doesn't mean that short-term things might, do stuff like this, reach down into here. Getting to 23,000, even if this dropped all the way down there, that still wouldn't be too crazy of a drop, right? Relative to the overall NASDAQ, this thing's worth $30,000. We got up to this level literally in 1 year because it's just a couple of moves that have taken place. So it's something to really consider, right? And think about. We could get all the way down there. It wouldn't be the first time. But yeah, so that's my thoughts for the NASDAQ. We'll see if we can continue to hold those levels that I mentioned in here. And if we can break above this level, like I said, that'll be when my opinion shifts. But other than that, I will continue to monitor this. You got to think about power 3 from the very start of the week. So if we're going to assume that it's going to be bearish, I would really like to see if we can get a rally up for like Monday, set us up with a bearish order block, and then potentially have that next day, maybe wick above that previous day's high, use it as counterparty, use this as a balanced price range. So the wick with displacement, and then see, if we could wick into that, but leave this available, leave that alone, and then start to give us our potential decline. We may, because of what the news looks like, look at the news, okay? It's all light news, right? There's some news, but it's all light-handed. The Clarity Act is going to be voted on, by the way, tomorrow. Holy crap, the 20th came so quick. Wow. So yeah, tomorrow they're going to start voting to see if the Clarity Act is going to pass. That's a very important bill, because if they pass the Clarity Act, that is going to open up institutional buying on a major mainstream scale instead of behind the scenes like it is right now. All these banks are buying up crypto. As it's tanking and everyone's scared, if you look at the documents that they are submitting, disclosures and all this stuff, and some of the stuff they're talking about on the back end and their plans and partnerships, these people are absolutely buying crypto while they're literally screaming that crypto is not worth it. While they're talking about how they're fighting each other, they're buying up the assets that they're saying that they're fighting against. It's literally manipulation in the truest sense. Like what they're saying is not matching at all what the documents of their actions are saying. Okay? So don't be tricked. It seems like they're using the chart to pull people out of long-term investments from coins that are part of companies like Ripple, Stellar. Literally on the back end, as Ripple and Stellar are declining, like XLM, right? If you don't know, as these things are tanking, both those companies and their representatives and technology is actively working on the back end to tokenize the stock market. Just 2 companies, right? There's other partnerships and stuff with other technology companies, but the XRP price is tanking. Everyone's being scared. XLM is falling. Everyone is terrified, freaking out, while the banks are literally buying in. They're literally becoming part of the overall structure of our economy. Just go look it up. You don't got to take my word for it. Don't take my word for it. Matter of fact, go look it up. Look in ChatGPT. Start asking questions. Say, what is going on with the tokenization of the stock market? Can you tell me all the details about XRP, XLM? Like, what is happening with all these companies? Right? And there's a lot of downplaying of what's happening. But again, would the banks rather be positioned when the stuff is at all-time highs, or would they rather manipulate, tell the whole world that it's not worth it, and then backdoor you, buy all the stuff that you sold at the lowest of the low prices, so that when it explodes, they get the most return on investment, especially because they've taken so long to adopt stuff. What do you think their objective is? Right? Like the government's calling certain crypto technologies and coins, which are basically just tools, right? I don't know, they call them coins, but they're literally tools. Like XRP token is a tool that's used for cross-border payments. Why call it a token? It's a tool. You're investing in a tool, right? Some of the stuff don't make sense, but it's just the way that they've had it organized, I guess. But there's stuff that even like XRP, it's classified as a commodity. And there's like 12 other ones that are also classified as commodities. Bitcoin's a commodity, Ethereum's a commodity. I think they said Solana's a commodity. That's a crazy statement, right? There's not every crypto is a commodity, right? So everyone that's invested in stuff like XRP or one of the 12 that have been mentioned in government documents, that's going to be fully established when the Clarity Act passes, everyone that's invested in this stuff, it goes from a token to now you're invested in a commodity. That's nuts. I am able to, on a couple of brokers that offer crypto, I'm able to borrow dollars against, like basically borrow against my crypto. Like if you have XRP, I'm able to use that as collateral to then get dollar bills. So like if you have like 10,000 XRP, 20,000 XRP, and you got to go borrow to get you wanted like $1,000 and you don't want to liquidate your XRP and you'll pay back the $1,000, later. You're able to borrow that $1,000 using your XRP as collateral. So this is like the beginning stages of being able to borrow against crypto as a commodity to get liquid cash. So it's an asset you're able to borrow against. You can't do that with every asset on the planet. There's only certain things you could do that with. Imagine being able to borrow money against the XRP portfolio that you built up to buy a home, to buy a car, instead of having to reach into your savings. This is where we're headed, people. Okay? Like this is what's happening. And the stock market is literally being tokenized through these companies that have been screaming from the rooftops, being sued by the SEC, that they're going to do this stuff, that they are part of this. They're actively already doing it. While everyone's talking shit about the next meme coin, or just focusing on all this other BS that is not going to be part of the future, or distracted watching cat videos on TikTok or some nonsense. Like this stuff is happening before your very eyes. You're either going to get on the boat and pay attention to this revolution with both AI and crypto. I think they're interconnected, by the way, crypto and AI, because when you have digital agents, they need digital money. So, it's probably going to be how things work. It's kind of a crazy future, but this is where we're headed. And if you're messing around, not learning about AI, not learning about crypto, not focusing on the things that are going to be the future, they're laying the foundation for the future, just like they did with the railroads when they first started putting the railroads in countries. It's that big of a revolution, but it's against our financial system, how we look at value, I don't think the dollar, I don't know if there's going to be a currency that's going to be dedicated to a particular country that eventually becomes the reserve currency of the world. It's going to be a reserve currency of the world that's not tied to a country. So it evens the playing field a little bit. So one country can't leverage, its currency power over another. It's kind of, I don't know how I feel about that. I don't know how it's going to affect things, but these are conversations that are happening at the highest levels of government. As you can tell, I spend tons of hours studying this stuff because, I have a daughter and I need to know what the world's going to look like and where I need to place my energy. because I'm not trying to get left behind. I just will not. I will not be left behind. I was too young for the dot-com bubble, or the dot-com boom, the internet, cell phones, all that. I was too young to participate. I'm not going to miss this one. And I hope that you take this information and start doing research, and don't miss it either. And trading is just one piece of what's going to happen. Trading will open up doors for everything else, right? Because trading, the way that we trade futures, you're a full rounded investor. Okay. So I think it's just a beneficial skill set that's going to help you with every style of investing, but you got to know where to invest. And if you choose to just be a day trader in futures, there's nothing wrong with that. That's my main view. But eventually you're going to want to figure out how to expand and get passive income ideas from being an investor, like dividend stocks, and setting up a portfolio that does that. Being part of crypto for massive, unheard of gains, because there's a lot of things that are being held back. I mean, think about it. We don't even have regulation fully yet for crypto. So it's still a baby. It's still a tiny baby relative to like the stock market size. I think the crypto industry is $3 trillion in total. The stock market is like 150 trillion if you get everything together, right? Or some crazy number like that. Like, that's nuts. So crypto's a baby still, and most people still don't understand it. I have resources that can help you understand crypto as well. One in particular, who's my mentor for crypto, who's been for the last 7 years, his name's Coach JV. His whole community is just amazing. Coach JV, look him up. If you haven't heard of him, I encourage you to look at him. It's hard to understand who is trustworthy in trading, let alone trustworthy in an industry like crypto, because there's such a stigma around it. And it's a lot of pieces of shit that took advantage of people. And that almost included me. But I knew I needed to be very cautious with what I was doing. And I've been invested in, crypto for, pretty reasonable amount of time, longer than I've been a day trader. Let's just say that. So, kind of just all compounds. And my day trading ability helps me know when, or it helps me understand the crypto chart and what I'm watching for, liquidity and inefficiencies. Where's the best time to get in, guys? Well, think of how we enter on the higher time frame, or what we look at on the higher time frame when it comes to these assets. It's a reasonable, piece to the puzzle. And then, of course, dissect the companies and figure out like what the companies do, what the cryptos do. And then, you can make some pretty good decisions, personal decisions, not because I'm telling you to make them, but because you went and did the research and you understand where the future's headed. Because again, this is where the future's headed, guys. There's going to eventually be rails of our financial system, the global financial system, that has to do with blockchain. And there's blockchain companies that are part of that foundation that you're going to want to have a piece of, XRP being one of them. So do your research. This ain't financial advice, but I encourage you to do the research, right? So again, when it comes to the NASDAQ, right, let's get back to this analysis. Hopefully you guys are clear on what I'm going to try to assume price is going to do. As long as we stay below this wick, I'd prefer to see this left available. If we do run up into this fair value gap, we have a wick right here with displacement. We've got outside of that consolidation, outside of that range, but it's starting to pull back into that range again. So I'm going to really be riding on the fact that when we come back into this, it's either very shallow and doesn't want to go up there, and we get like an order block that then breaks down, sets us up with a change in state of delivery again. Okay. Or, price comes up here, maybe tags this a little bit deeper, and then starts to print lower. You could literally wait for something like this to happen, and that'll set up a market maker sell model that you can use to then target the low there. Because again, if this is a large displacement and we see a daily retracement happening, all you got to do in this type of scenario, playbook wise, is see this as a displacement that left inefficiency, so it's probably going to come back. We took external range liquidity. It looks like it's going to come back. That return into that range is internal range liquidity. You're looking for a PD array in there, whether it's a wick midpoint, whether it's an order block, a fair value gap, whatever is in the middle of that range or inside that range. Doesn't have to be in the middle, but inside that range somewhere, right? Maybe above equilibrium if it can get up there, or at least in that lower 25%, right? Because of this wick here, right? If it can give you a retracement into that, and then we start to tip over, especially if it has something like this, where an order block forms on Monday, and then Tuesday opens up, maybe it spikes up, hits this, but it closes like that, and then we get displacement, that sets you up to now automatically think, okay, this is a fair value gap fill to continuation. And what a continuation to what? Maybe to fill in the rest of this fair value gap that we talked about down here. Okay. So this is what I would like to see. Ideally, best case scenario, this is what I'd like to be a part of this week. I'd like to see some type of retracement. You know, we could very well see, you know, price open up, look like this at some point, right? Maybe it shoots a wick up there, but then eventually turns into something like this. Oops. You know, this is another possibility, right? The next candle that opens could reach up, reach into this fair value gap like that, leave a wick like this, but then just continue to go lower. You know, that's a possibility as well. In this case, you'd be able to see a smaller market maker sell model on a daily basis, right? With this scenario that I just showed you right here, with the two candles where one's bullish reaching up, and then the next one reaches up, takes out the previous day, and then drops. That's a very strong, high probability play that I love. It's called the daily fair value gap fill to continuation. This one right here, you could see a very similar idea, but the first example was over a week. You'll expect that to deliver overall. With something like this, it may deliver in the same day because, right, the open will be right there. London will rally up. Maybe it comes and tags this, and then we start to rapidly run away through London. And then New York maybe continues finishing off the market maker sell model that may have been created with this offering the buy side of the curve on a lower time frame, and then this decline eventually, you know, transitioning through the New York and maybe even the rest of the day. So these are two scenarios that I would like to potentially see based on what we see here. Now, again, if we get something like this is what I will favor today or this week. I want to favor seeing something like this. As long as dollar keeps going higher and the other assets continue to support downside in the indices, like they somewhat are. Again, all the stuff we talked about kind of led us to this point. And we left this for we left this 50% level. So if we can get that, that'd be ideal. Outside of that, if we can get this to open up like this, say this is what happens. Okay, we already took stops. We're inside of a higher time frame PD array. This will be our contingency plan. Gun to my head, the first scenario is what I'd like to see. But let's play devil's advocate, right? If we get this candle that opens up to be a bullish candle that cannot even close a candle below the midpoint of this wick, and we can't even close below the low of this sell side liquidity here, if price runs down like this and starts to run higher, maybe it overtakes that. Okay, and then we get something like this to take place, right? So sell side, buy side candle, maybe it takes that out. And if we get price to come up like this and then decline again, using this as a bullish order block here. And then the next thing you know, we see another displacement. If this type of thing happens, we got trendline liquidity up there to adjust to. Okay, so I would say that the midpoint of this order block is the line in the sand. But when we go from this high to that low, we got equilibrium. So even if price gets up beyond this, if we invert this fair value gap in here and something like this occurs, like say it goes like this, right? Say it continues to hold in that and the wick goes out, touches the order block down here, but the body's of the candle stay inside that fair value gap. And then we start to see displacement away. That is clear indication that price is looking to turn. And dollar in that case, I would assume would start to go lower if we're in a symmetrical market. You know what I mean? But this right here would be a contingency plan. So I don't care what price does. If it decides to go lower and follow the initial plan that I'd like, sure, that's great. But sometimes in war, you got to change plans. So you got to be flexible. But I think, gun to my head, with all the things considered, intermarket relationships, all this stuff that we've discussed so far, I think it's a very reliable assumption, at least with what we see here, if this continues, that price is going to continue to drop. And we have the rest of this fair value gap to try to observe, and we'll see how it goes, right? And again, if by the end of the month, which we're about to hit that in 10 days, if by the end of the month we start really accelerating and we get down below here, we'll just keep going lower until price looks to go higher. Okay. I found some great projects. It's going to be gone second quarter next year. Oh, nice. Yeah. Yo, what's up, bro? You're a ICT. I follow you, by the way, bro. Go follow him. He posts a lot of really good ICT clips. If you guys aren't following him, I encourage you to go follow him. Brother, I'm planning on starting streaming AM session on my other channel, UTrades. Hopefully, yeah. Hey, I would be more than happy to get on a tag team live stream if you want, bro. I'd be more than happy. We'll just have to set that up. I think you follow me on Instagram too, right? Maybe you can hit me up there as well. We can talk about it. I appreciate you hopping in and saying hello, bro. It's good to hear from you. Yeah, I'm totally down, bro. Totally down. Just let me know when you'd like to get into that. We'll make some time. So yeah, hopefully everything that we talked about makes sense. We talked about a lot of stuff. Hopefully you guys get the gist of what it is that I'm trying to identify. But I've kept you guys here long enough. Damn, this is the longest live call we've done since I've had a YouTube channel. 4 hours. But hey, y'all stuck with me. Y'all got as much value as I tried to provide. We had some good conversations. It's always good hanging out with you and hearing from all of you. So I hope you guys feel that your time was well spent here. If you did have any questions about anything, maybe I didn't get to answer today, just let me know in the DMs. You could DM me here on YouTube now. Did you guys know that? They have a DM feature. So you can actually hit me up there as well if you go look into that. Or you can just hit me up on YouTube or on Instagram. And if you're not following me there, definitely go do that at WMG Trading. No special characters. If anyone has special characters in their username and they're claiming to be me, it's not me. You can always just hit me up or hop on my live calls and ask me those questions as well if you're unsure. If you're unsure, don't reply because everyone's trying to scam everyone. I'm not a scammer. I will not trade your money. I will not ask you for money unless we've already had a discussion. I mean, none of this crypto stuff. I trade crypto. I invest in it. I will not do it for you. I don't encourage you to do anything unless you go research it and make the decision on your own. Okay, so don't be fooled. Please don't be fooled. Okay, if it sounds too good to be true, it probably is, right? So yeah. So that being said, again, hopefully you guys got value. God bless y'all. Thanks again for all the love and support, and the feedback and conversations. I'm late. Yeah, I commented on everything. Short-term draw for me is bearish. Literally talked about it like 5 seconds ago. Thanks, man. I got a lot of. We really appreciate vision. Looking for price to sweep previous month's low. Yeah, it pretty much already did that too. So that's another reason why we gotta kind of just wait and kind of see what it's gonna do at this lower level in here. Because if it can retrace into this and not blow out our invalidation levels we discussed a second ago, then we're gonna keep going lower, right? But all in all, this wick below this low, that's very, very sensitive to that low. It's not always going to be super likely that it's going to just rip through that when it does this type of stuff. Okay. Like a good example of that is here. Price rapidly went lower, but what did it do? Came back up and closed above that. So it wasn't as bearish as it could have been. Okay. And then this here, price did displace, but what did it do with this low? We stayed above it and it failed. And then we changed state of delivery back to the upside. So what happened? It ended up reaching for buy side liquidity again. Okay. So yeah. Appreciate you, Maddie. Again, hopefully you guys had a good time. We walked a lot of stuff, talked about a lot of stuff, short term, long term. So hopefully you guys were able to gather that. But I gotta go. Appreciate you guys sticking with me this long. Hopefully you guys got value. Don't forget to like the video, subscribe to the channel. Let me know if you have any questions. If you have any secondary thoughts, you can always obviously send me messages, or if you have like a screenshot or something you want me to discuss with you, if I get some time today, I will definitely get back to you and we can go through it. And again, before we leave, remember power 3 at the start of the session, at the start of the week. Just like we talked about at the very beginning of every single call of every Sunday, the first and foremost thing, if you're bearish, your initial couple days should be expected to go against that. So on Monday, I would not be expecting to just fly down below the sell side. You should be expecting accumulation manipulation on Sunday and Monday. And then going into Tuesday, right, I mapped out those 2 candles. Sunday would be the first candle, or Sunday, Monday would be the first candle because it couples both days together, because Sunday's a half day. And then the second candle, maybe it's going to wick through Monday's candle and into this level, or just stay below this and then continue to go lower. But don't be the person that goes in, sees it going bearish, and then all of a sudden you're going to want to just chase it on a Monday. Okay, expect that you're going to have some type of, trading against your overall narrative for the start of the week. Okay, and then if we can get that to happen, get a rally up, you can get short-term buys on Monday potentially, targeting the gaps, targeting these levels we talked about. And once we decide or are able to see what the response is going to be, how the bodies and the wicks of the candles on this time frame respect these levels, we'll be able to really make a decisive decision on whether it's going to be worthy to go lower or if it's just going to be a slow week. But again, gun to my head, I want to see if we could try to get through this. First and foremost, though, I wouldn't be surprised to get manipulation, run up here, scoop up some orders, respect this balanced price range, stay below the midpoint of this wick, and then try to go lower. So yeah, that's my opinion. Never Content said, do you, welcome by the way, if you're new, do you trade gold as well? I observe gold. Do you want me to look at gold? We could pull up gold. I know Tony, you probably want to see gold too. I talked about gold last week. I don't think anything's really changed. That was a call I did with a student the other day. Switch to gold real quick. Yeah, gold has been definitely held up. Oh, yeah. Remember when we talked about gold? Remember how I talked about this pink level in there? You guys remember how I said that's probably going to have to hold, or it's gonna hold and go lower? Looks like the analysis we did on gold the last time worked out. We talked about this pink line. I forgot what that was. I think it was a volume imbalance. Yeah, right there. See that? Close there, open there. Respect to the midpoint, breakdown, respect to that gap, change in state of delivery. What did it do on the next candle? Came back up, respected the midpoint, lower 25%, continuation. Look at the bodies respecting that behavior. So yeah, we got this as a low resistance failure swing, like we talked about as well. Silver. Oh wait, no, was that? That's a failure swing, but silver's continuing to drop as well. I can't remember if we did an analysis on silver recently. I think we referred to it. Yeah, I would not touch any of these markets. Gold and silver, I mean, you can if you want, but this stuff is dramatically manipulated right now because the new financial system, all the updates that are coming, they're buying up the gold. There's not enough gold and silver to do anything with, and it can't be super expensive. So they're minimizing it, just like they've done for the last 20 years, or since we got taken off the gold standard, that, you know, where gold used to back our dollar. So there's a lot of stuff happening. Oh yeah, we talked about this gap in here being targeted on gold. If you guys remember, if you go back a couple of weeks, when did we first? Yeah, right there. If you go back literally 2 weeks, well, 3 weeks at this point, we talked about this run higher, potentially coming down to that fair value gap. We beautifully went right down into it. See these equal lows in here? Beautiful low resistance liquidity. If this would have been below that low, it would have been a little harder to get down there. It may have still went down there, but it would have been higher resistance. And if you guys remember, we talked about in great detail the list of characteristics that label something as high resistance or low resistance. But yeah. So in terms of gold, real quick, so I can get you guys out of here. Shit, it's already a super long call. Might as well make it 8 hours, right? Fuck it. Might as well get on and just talk about everything, right? If only I had that time. If only I had time. So yeah, what I would be thinking here about gold is I would definitely have close attention to this failure swing in there. And that's even more significant because there's also a gap coupled with it right below it. I think this is is that the monthly? Quarterly. This is a quarterly fair value gap down there as well that may get utilized. Could see there's a small volume imbalance inside that, but we got this wick displacement. That's my momentum order block that we talk about. So we don't want to see the midpoint of this wick. If it's going to be extremely bearish, we would not want to see that middle of the wick get traded to. We'd like to see it stop just like this. And on the next candle that forms, well, that's a quarterly perspective, so it's going to take a while. But you could see kind of where that's at. But yeah, you could see large wick displacement. So this wick here, let's use this bigger range, should stay in that lower 25% if we're going to keep being bearish. If we start rallying up and we get above this midpoint of this wick and we get outside of this fair value gap in here, then that would be something that triggers in buy side. So the wick midpoint, the fair value gap, and this upper part of the down close candle here, if this is what happens and it closes like this and we start ripping towards that level, once it takes out this high, that's a change in state. You get early signs when the wick midpoints get given up and the fair value gap turns to an inversion. That's an early sign of a change in state of delivery. And then once it tags this upper part, that's a full change in state. And at that moment, I would be pretty confident that we're going to target further buy side, maybe even just get this stuff if it wanted to. But for now, because we're at that lower 25% of the wick, if it stays below that, I'm going to just continue to believe that these relative equal lows will be taken out. And then we'll potentially reach down into that level right there. Well, we'll see, right? It's heavily manipulated. There's war and all this stuff happening. So the uncertainty is really good for these assets. But clearly they drove it aggressively higher just to liquidate the crap out of people. Kind of like a crossover, right? They ran them up aggressively and then just slammed them down as they were at all-time peaks with euphoria. That's just the way it goes. What goes up must come down. So still super up overall. But, you know, expect this type of stuff to happen. Price can't go up forever because now, look, we have inefficiency all throughout here. So there's a lack of sell side in all this run higher, all these little gaps in price. Well, we have that one down there. I don't think we're going to end up going down there. Maybe we do. I don't think so, though. We're going to have to see aggressive moves in order to believe that. But yeah, that's my opinion on gold. Hopefully that's helpful to you. And if we just kind of shrink it down a little bit further, give you a little bit more context, because I appreciate you hopping on. Okay, we got this little gap in there. I'm not really too concerned about that. We have this swing low here. I would more so be focused on this gap in here. Early signs, aside from the bigger perspective that I gave you, about the large wick and that midpoint, the possible inversion, the change in state of delivery that might happen if it gets through those levels. Aside from that perspective, if we want to get like early signs that that may start to unfold, of course, we got this little gap in here. We got this low to that high. That is the parent of this price delivery in here. So that low to that high is significant for us to get the equilibrium on. So if we can get this to fail to take this low out and price accelerates through this, watch how the next candle respects that. Because if we can get, like the next candle to displace higher, so that's a change in state of delivery. And then if we can get the next candle after that, right, assuming that, another candle forms, if we were to get the next candle after that to then reach down into, that order block, basically come in to justify that order block as a change in state, we get price to maybe reach down into this like this. What the hell does it look like that? There. Well, maybe if we can get something like this that breaks above that, this is hypothetical, right? Just so you can kind of think about what could happen. And if this does happen, you'll know what to do. So if we can get a change in state of delivery like this above this high, you also have this fractal high here. See how that got a lower high there? We have a high, low. If we get above that, that'd be a higher high. You can also look at that as a bullish breaker. Okay, because we got the high, low, higher high once this wick is traded through. So if price was to come down on top of this change in state of delivery, and then we get that rejection, and then we see like the next candle, it does something like this, right? If price breaks through that, that is called a double change in state of delivery. You got one change in state, blast through, plus a breaker. It doesn't always have to have a breaker, but in this case, it would, right? We'd have a failure to break through these lows again. It's confirming this as a change in state because of how this close is forming on this candle that tries to revisit it. And then you get a break through another bullish order block in this case. That's a double change in state of delivery. That is one of the strongest confirmations, especially after a stop run, that price is now sincerely going to go and create a turning point. And in that case, you could then look for, since this is the daily chart, you could look for, daily high, daily high. These are relative equal highs right here too. That's interesting. I would keep 42.14 thought of, or at least noted. I don't like that. Okay, let me go a little bigger. Okay, so if we can get it to go up above that, or if it could do this, I would not be surprised at all if this is what they look to target. Once you get outside of this gap too, because, it's a gap. If it breaks through that, you'd look to see if that could be an inversion. And depending on what's happening in the world, because gold, oil, gas, silver, all that stuff is it's a commodity. There's actual true supply and demand factors associated with this market. There's also, it's also heavily driven by news. If Trump tweets anything, or anybody, that may have an impact on the economy tweets something that may be negative or positive for the market, or the economy, I should say, it could have a direct impact on what gold decides to do. And, it could just be something peaceful. And then gold just says, oh, yep, say less, hold my beer. I'm going to just fly all over the place. right? That's part of why I don't really trade gold or silver. I traded one gold trade, I think in December on Sunday. I never trade Sunday and I never trade gold. But, you know, for whatever reason I chose to. And I showed that on Instagram, by the way. That was one of the examples of me showing what we really do over here in terms of profits and stuff. It was like $4,500 or something like that on Sunday. But again, none of that matters. Okay. I don't encourage you to trade on Sunday ever, first of all. But someone asked me on that day and I'm like, oh yeah, sure. Let's go show by example. But yeah, so hopefully this kind of gives you some clarity. Just notice also that when price goes lower to go higher, if you go to the 1 hour chart, given what we just talked about and the context that I just gave you, put it on a silver platter, right? If it was to blast off and do something like I described, if price went lower to go higher and we have very obvious targets up here that could be reached for, why is it not? Okay. Okay. Would this not look like a market maker buy model that would support that higher time frame delivery like I just showed you? And then we drop down to this lower time frame with the context I just gave you. If we're sincerely going lower to go higher, would this not be a market maker buy model? If this breaks above, like I showed here with this crude depiction, right, of this example, right? Remember the candles up here I showed you? If this got up here and did what I showed you from that higher time frame and got above the levels I mentioned, and we were to retrace into this range, is that not a market maker buy model? It is a market maker buy model. How about this? Buy side, sell side. Is that not a sell model? Is this lower, higher movement, is that not setting up pieces of a market maker buy model that eventually failed, of course, because it was bearish? Is this whole move not a market maker sell model? Right, so just kind of weaves in some of the stuff that we always talk about into some of the description I just gave for gold on that higher time frame. We're always in a market maker buy or sell model, you guys. Doesn't matter what asset, it's all the same. So yeah. All right, now I've really kept you guys too long. We're 4 hours. All right, you guys got lives to go live. So again, thank you guys for having so much interest to hang out. Hopefully you had a good time. Hopefully you got value. Let me know if you guys need anything. You know, hit me up on YouTube in the comments. You could share your thoughts, or you could just hit me up on Instagram and we could have a conversation. Or you could join my Discord. The free Discord link is in the chat or in the description. If you want details about my private group, you can use the QR code or the other links in the description. But again, all in all, thank you for the love and support. Don't forget to like the video, subscribe to the channel, and I hope this was valuable. I hope that everything we talked about today was valuable, including the stuff that wasn't specifically about trading. You know, hopefully you guys got a lot of value. Okay. So with that being said, God bless all of you. Have a wonderful rest of your Sunday. Hopefully you get to spend it with family. And I will see you beautiful people here on YouTube back on Tuesday at let's go with 5:30. Yeah, let's go with 5:30. Why the hell is ADP employment change yellow? I don't know. I don't trust some of these yellow folders to be yellow. I don't know. We're gonna see, yo. We're gonna see. Thursday might be a fun day though, because it's got my favorite news event, unemployment claims. I don't know. I love the reaction that day gives us. The manipulation, for whatever reason, is extremely easy to track. It seems like it's always that way. I don't know why. I have no clue why. I really don't know. But we'll see. We'll see what happens. All right. So I'll see you guys here on YouTube on Tuesday at 5:30. Those of you in my private group, I will see you beautiful people bright and early tomorrow. And again, let me know if you guys need anything. God bless you. Thank you for the love and support, and I will catch you on the next one.